Ladies and gentlemen, please take your seats. Our session is about to begin.
Hello.
A very good morning to you. Thank you. Thank you very much for showing up for this very important session. My name is Alan Kasuja. I am the presenter of Africa Daily, which is Africa's most influential podcast, if I may say so myself. And we tend to unpack all these issues that affect the continent. So for me to be here to moderate this session is indeed an honor, and thank you. Thank you to each one of you for showing up. My expectation is that today we shall have a robust conversation and that we shall leave this place clear about what ought to be done in order to make sure that we advance these very important conversations into action. To get us started, I'd like to introduce to you, for those who don't know him yet, Karim El Ainawi, who is the Executive President of Policy Center for the New South. He'll be opening this session. Thank you.
Thank you, Alan. Marhaba bikum. Welcome. Welcome to all of you. We're glad to host you here with the African Center for Economic Transformation, which I thank them, and particularly Mavis, to her personally, but also through her team, and also congratulate her for relentless work for the place of Africa in the global financial architecture, and more generally the place of Africa in the world. I don't have much to say, but I just wanted to share a few impressions at this stage of the annual meetings. I think there's a sense, and we had Joe Stiglitz yesterday giving us here a dinner lecture, and he said many interesting things, and one of those was that there's the feeling that this is departure time, a critical juncture to where we don't really know, but we can sense, we can feel it, and I think there was, and you are better placed, as a journalist to feel the temperature of human moods, but they matter. There's not much we achieve as human beings without romance, without commitment, without a sense of purpose. We don't achieve much through technicalities. They follow the intention, the ambition. And this is why we're very happy with ACET and their friends and coming to join them, who have started this journey before us, to support this. Of course, millions of details have been will be need to be precise, but I think there's a good sort of sense of something happening, urgency, and it's important as think tanks that we keep on helping governments as much as we can to modestly contribute to keep the ambitions at the right level. We can always solve callable capital, SDR reallocations, hybrid and blended money, whatever. These are things we can all solve. And what is important for us, it's larger, at-scale multilateral development banks, efficient collective insurance mechanisms against risks, i.e. the IMF, and of course, good governance in our country. So we need a system that rewards good governance, good students. As we all went through school, we know that this needs to be a rewarding mechanism. Differentiation, at some point governments will have to accept differentiation in terms of rates, in terms of volume of money they receive based on their performance. There is one code, and I'll finish on that is important in this broad view and sharing with you, that has not been cracked, is really how to engineer organize a significant flow of private capital to Africa to respond to its development need. And of course, whatever the size of the development banks, they will not solve, and we don't expect them to finance all these needs. And we have not yet have not sort of picked from these meetings a strong commitment to this idea and also interesting ideas, and this is on what we work all together to be a catalyst, to engineer, to organize this flow of capital in a non-debt capital in a significant and efficient manner. So again, warm welcome. It's a pleasure to be here with you, and you can count on our continued support. And again, Mavis, thank you to you and your team and all our colleagues in other think tanks that have been involved in trying to bring their modest contribution to this effort. Thank you.
Let's give him a round of applause, ladies and gentlemen. Very, very important remarks, and I was going to challenge him a bit on the engineering of capital flow, because he makes an interesting point there. I would love to unpack that, and hopefully someone in the room will. What does that look like? What does it mean? And how do we make sure that Africa is more attractive to capital? Now, ladies and gentlemen, it's with a lot of pleasure that I introduce to you two distinguished guests to start with. First of all, His Excellency Mohamed Maït, who is the Minister of Finance from Egypt. Thank you very much, sir, for joining us. Let's give him a round of applause. And sitting right next to him is His Excellency Njuguna Ndongo, who is the Minister of Finance from Kenya. Let's give him a round of applause as well. Between Professor Ndongo and His Excellency Maït, we shall have a lot of questions answered. Now, starting with you, the Honorable Maït, you're a leading voice in the Sustainable Debt Coalition. You've said quite a lot of things, and I've come across quite a bit of the work that you've done around that. I wonder what you'd say are some of the concrete steps that ought to be, even before we get to the concrete steps, what does the debt crisis look like across Africa from what you see? In the course of your work, what have you come across? How do you paint a word picture for us on what you see?
Thank you very much for having me with you this morning. And from my point of view is that, and please, this is my point of view, what I'm going to say. We were not responsible for this crisis. I say why, because at the time of COVID-19, we decided to work with all the pain of the pandemic. We decided to work. We did not give our people trillions of dollars and euros. And we asked our people to compromise between the economy to continue and to take care of the health issues. After the pandemic, I think our markets was balanced, but Europe and America will not. Why? Because the liquidity in people's hand were much above what at the beginning of recovery is available in the markets. The market was not ready. So compare supply and demand. Demand with a lot of liquidity given over the 2 years, supply not yet ready after 2 years everything was shut down, and you started to see the negative impact that inflation started rising. And with the inflation started rising, everybody also want to compensate losses they made over the 2 years. The oil companies, the ship companies, the others who made losses over the 2 years. Eventually, you have a situation which the monetary policies decided to respond by tightening the policies. And with that high inflation, high interest rate, we have to pay the cost. Why? Because we are countries developing and trying to make better for our people by borrowing money. So we found ourselves, we have to pay the cost twice. Number one is to buy food and energy and our need at a high cost. Second, the outflow of the investors' money coming out, leaving our countries, and if we need, we have to borrow at a very high cost because interest rates were high. So we were under huge pressure. We need to buy vaccine for our people. We need to buy food. We need to buy energy, but very costly. And with the war, the pain becomes more and more very hard for us. So eventually, you ended up with a high level of debt, which most of the developing countries were not able, particularly in Africa.
I just want to pause there for a second and bring in Professor Ndongo. You've been minister for close to a year, and what he's saying, I haven't seen you nodding, but I know you quietly agree with him, because if you speak to any Kenyan at the moment, they'll tell you about how much taxation and how much, you know, the country is trying to repay its debt. Is this something that you can relate to? Can you relate to what the Minister Might is saying?
Thank you very much. And I wasn't nodding because this is a historical problem that we really need to trace way back. I was, when the Minister was speaking here, I was remembering what the kind of write-up we provided during the 1997 HIPIC initiative. And one of the arguments we had was that debt, that was the risk of external debt, was that it was actually being a hindrance. It affects investments before it starts affecting growth. So it was a major hindrance to even the private sector reaction. That's what we were calling the debt overhang problem. And the HIPIC initiative was supposed to destroy that, so that we destroyed the market from this waiting option, and also a feeling that taxes will rise in future to effect transfer to pay for debt. That is the basic problem. But let me come to the problem that the minister is actually talking about. We are facing liquidity challenges right now, which are exacerbating the already persistent shocks that we have had, and those shocks have actually creating permanent effect. And this is where we are now. And when we are trying to react or to recover from those shocks, then the liquidity crisis is actually coming in two ways. One, the interest structure is actually, we are spending, let me say, if I give an example for Kenya, for example, we were targeting a fiscal gap of 4.4%, but we end up with 5.6%. That difference is not increased in spending, but actually interest costs, and the debt has ballooned because of currency depreciation. And that's where the minister started. There are real figures. You can actually show the real figures. This is the impact of what is really happening. Now, the biggest problem right now, and that's why this debate becomes very important, is that how you resolve the liquidity crisis is very, very important. Because even domestic markets are not providing resources. International markets are quite prohibitive. They are reacting, something I'll talk about later, they are reacting even to what is the risk in that particular country, and the rating technology is something that this ACET should work on this, because we really need to understand the risk profiling and rating technology, because until we get that handle, we are not going to sit and challenge the rating agencies without that handle. But the bottom line is that the rating agencies just raise that. So the risk profile, it's like a momentum on itself. It's like a conspiracy theory. And that's where we are. Now, the biggest issue is how we resolve this liquidity crisis, which is also coming from the effects of even so much demands. In Kenya, essentially, we have not raised taxes. It's only because the pinch is being felt by everyone, so everybody thinks it's taxes. Now, the bottom line is this: how we resolve this liquidity crisis, and especially for us, everybody is looking at us in terms of the June 2024. Are you going the Ghana way or the Zambia way? Which is actually, I don't know how to describe it, but it's really, this is the issue of perception. But the bottom line is that this country, we are not facing a solvency problem. We are facing a liquidity challenge. But how we resolve those liquidity issues can actually generate solvency challenges. That is how I think I can summarize.
Yeah, and I think at that point, thank you very much, Minister Ndongo. I would like to go back to you, Minister Mait, and ask you for the concrete action steps. What needs to be done? This is an area that you've done a lot of work on. And in your mind, given that we have this liquidity challenge, what happens next?
Yes, I think the issue of high debt service, high cost of financing, low liquidity, all these together represent the challenges we are facing today. I believe that one of the elements, a lot of talks are about it now, is how to reform MDBs and ensure that they can play a role in sorting out this conflict, this problem, and increasing their financing to developing countries. This is number one. Number two is how to create some of the tools, new tools, which can also help in easing such pressure, particularly on developing countries. And these tools might not be only the MDBs. You can see other commercial banks and other. Now they talk about sustainability bonds. They talk about how can we use, for example, what we hear, blue bonds. But let me say my experience. My experience is that I need to diversify. So I started to go Far East. I started to issue in Chinese capital market. It's cheap. I'm issuing next week Banda bond, cheap. I'm gonna go to the Japanese capital market, issue Samurai, which is also not costly. I'm trying to use what we call it guarantees. I was able to get guarantees from the African Finance Corporation, from the African Development Bank, from the Asian Infrastructure Bank for close to now $2 billion US, which can help me to get financing cheaper. So we have to think about other tools to help us to get and reduce, get financing and reduce the issue of liquidity and also the cost of financing.
What do your friends in the West say when you pivot towards China and the Far East? What are they saying to you?
Nobody is saying anything to me because eventually they didn't sort the problem. I think when they sort out the problem, they will speak to me. I'm trying to sort my people problem, my country problem. So they should help me when I'm trying to think about how I sort out the problem because I agree with His Excellency the Minister. The rating agencies have no mercy at all at our situation. They have their own technology and the calculation, and they just press it and make the decisions. Did they think about us? Did they think about the challenges we are facing? No, absolutely not. They are just looking at their models and make the decision according to their models and their data. So we are trying to sort out the problem. So we have to think about the alternatives. And I believe, and I'm very honest in that, alternatives are coming up. Alternatives are coming up. And we will have to use the alternatives. And this is the reason why we said, please, look at the current international financial architecture. Is not working in favor of developing countries. Is not working in this way. Look at the crisis we have been for 4 years, which is not our crisis. It's the world crisis or other crisis. But we pay the cost. We pay the price.
Yeah, that's very interesting. I'm going to come to Ed Mountfield in a moment. He's been listening very closely, and I'm sure he's got some thoughts on that. But I wonder, are you better off approaching them as Egypt, or is there some need for some sort of collaboration involving other African countries? Does that put you in a stronger position, a better negotiating position?
Definitely. And I think the negotiation we have been doing over the last 2-3 years, I think one of the successful example what African Exim Bank did over the COVID-19 period, when we found out a common solution for Africa, and it went very successfully, and we worked for that. Now we have meetings about how to make the African institutions play a better role. Let me say something. I said guarantees. The two most important guarantees I've got, one from the African Development Bank, one from the African Finance Corporation, and both helped me to get financing cheaper. So now it's a time for the African institutions to play the significant role in supporting us at this particular difficult time.
Okay, thank you very much. Let's give him a round of applause. In a moment, we'll be hearing from, again, I'll be coming back to you, Minister Ndungu, but Ed, you've been listening to what's being said, and for those who do not know, Ed Montfield is a Vice President, Operations Policy and Country Services at the World Bank. What are your thoughts on what you've just heard?
So, to be very blunt, I agree with everything that Minister Might and Cabinet Secretary Ndungu have just said. I think we need to make the case that the international financial architecture is not working, and most of all, it's not working for Africa. And we need to recognize the common framework is not working, and that we need to have radically stepped up global action and fairer burden sharing between the South and the North. As you say so rightly, Minister, your country and other countries in Africa and the South did not cause the crises that the world is facing now. African countries are among the lowest emitters of carbon, but they're on the front line of the climate emergency. They are on the receiving end of a financial architecture for the world that's not working. So we need to radically change things. I think that we've had many discussions during our annual meetings this week about MDB evolution, World Bank evolution, and I think that there are important steps being taken as part of that conversation to make sure that we think about how we can better leverage every dollar that we have available to stretch our money further. Important discussions about how we can mobilize additional resources to support this effort, both through private sector mobilization, some of the ideas that Minister Might mentioned, but also through domestic resource mobilization. And we need to, of course, also remember that there are quite a number of countries in Africa that have tax to GDP ratios of single digits, which is not enough to run an effective state, let alone deal with a climate emergency. So we can talk about all of these efforts. We can talk about how international financial institutions need to get faster. That's a priority as well, to get liquidity to countries dispersing rapidly, and that there's more that we can do, both on the red tape end in the international financial system, but also on building capacity and helping to build institutions that can help projects to move quickly. We can sharpen our focus on impact, making sure that we get the most development value from every dollar. But I think we need to also recognize that the scale of the challenges that the world is facing, and Africa first and foremost, is such that it's going to take much more action by the international community to come together and provide the resources that are needed. IDA and other concessional windows like the African Development Fund, these are vital lifelines to Africa. Africa has become far and away the largest part of IDA, and looking at, even at IBRD and IDA as a whole, we are now providing 40% of our financing is for Africa. We delivered $29 billion in our last fiscal year, which is 50% more than just a few years ago. But it's going to take much more than that. So the only way that we can really address the challenges, and as Cabinet Secretary Ndungu said, avoid liquidity challenges becoming solvency challenges, is to provide much greater positive net flows, much greater, deeper concessionality, and that's going to take replenishing our concessional windows in a very big way, as well as fixing the common framework.
Right, thank you very much. I just wonder, I was quietly wondering to myself how long the World Bank has known that the architecture isn't working, and the way things are structured at the moment is not helpful. I wonder what process is ongoing at the moment to make sure that things get better. What does that look like? You say that these things need to be done, so the World Bank has zeroed in on the need for these changes to happen. What sort of action are we seeing at the moment? And how consultative is it? Who's drawing up these plans? How do we make sure that even the mistakes that have been made in the past, and if you talk to anybody who knows anything about structural adjustment programs, they'll have 1,000 opinions about whether or not those were effective. The question is, how do you make sure that mistakes that have been made in the past are not repeated, but also moving forward, that the next form of architecture is effective and works for the continent?
Your question is a very fair one, but I think my response would be that the World Bank is not, and the other elements of the international financial architecture are not just the staff and the management of these institutions. It's a global collective, and of course the unfortunate reality is that some voices are louder and stronger than others, but I think we need to remember that cash contributions to IDA, our fund for the poorest countries, stagnated in nominal terms, so have come down sharply in real terms a decade ago, at about $23 billion per 3-year replenishment period. We've been able to scale our financing up by 2 times in that period, but the cash contributions have remained the same. So we've been advocating replenishment after replenishment for real steps up in the net flows. We are one of the loudest voices on that, but we need our shareholders to evolve as well, and that's going to take the kinds of loud voices from Africa that we've been hearing to play into those conversations. We need to work together to solve this.
Thank you very much, Ed. We need to give him a round of applause. And Abdul Salam Bello is from the World Bank. He's Executive Director, World Bank. I'd like to hear from him before I come back to Professor Ndungu. You represent 22 countries?
No, 23.
23
you
countries.
missed one, so sorry.
Right, 23 countries. Just pick up on what your colleague has said in terms of the voice, in terms of making sure that it's not just a voice, but it's one that is heard and that one that is effective in driving the change that is required.
Yes, no, thank you. Thank you very much. Very good to be here, and good morning all. And really I want before to appreciate really the strong job, also very excellent job my very good friend Ed is doing. Engaging the management of the World Bank fearlessly, I will say, but also engaging us as executive directors, especially on those issues of concessional resources, IDA, going forward. And I will start building on that. I think on IDA, and Ed mentioned it quite well, and it speaks really to concessional resources, and we have been making strong plea, and with a lot of colleagues, friends here around the table, on tripling the IDA, but also supporting what the UN RG mentioned on SDG stimulus to achieve the Sustainable Development Goals. I mean, he mentioned that we need at least $500 billion per year to achieve the SDG. So the issue of resources, concessional resources, are very critical for us, and we heard the honorable ministers talking about debt, resource mobilization on the capital market. Those elements are completely interconnected. And looking at my constituent countries, we have seen that even in the issues, the challenge they have regarding resource mobilization on the regional market over the recent months. We have seen Côte d'Ivoire having a lot of challenge to mobilize the resources on the UEMOA market, but also Senegal recently. So those are the very core issues, and development is a matter of servicing the people, and the people in Africa is young, but also growing quite fast. So the pressure also is there. looking at IDA, how the instrument has been fitting for purpose. We have seen that we had to front load the IDA to address the COVID pandemic, but also now we are not front loading it, but we are stretching it because to address also what we call in a very fancy way the poly crisis, which also is affecting most of the developing countries. We've seen that even recently here in Morocco with the earthquake. We've seen the earthquake in Syria, Turkey, now Afghanistan, but also the multiplication of the various crises in sub-Saharan Africa. I'm sure that at the OCP they make a lot of very good analysis on the risk and fragility in the continent, where you see that you have an arc of fragility going from the Red Sea to the Gulf of Guinea currently. So those are the current challenges, which mean that we need to accelerate also the development response. And Ajay Banga mentioned it yesterday when he opened the annual meetings. In his statement, he said, we need really to go faster to reduce the red tape. So those are the issues we have been discussing as well at the board, but with various other shareholders. And Ed used to say we need to, he has his mantra, speed, scale, and impact. So we need to go fast. We need to go even faster than we are doing. If you spend 27 months just to bring a project, I mean, it's half of a political term. And we had some of our governors say that actually you are working you are doing the job for your successor, which is even politically is not maybe the most intelligent thing to do. So the debt issue definitely is fundamental. But also you mentioned the voice representation. We're cracking this joke, 22 countries or 23. Yes, at the board of the World Bank, 48 countries spread across 3 chairs. I represent 23. My other colleague, Anglophone, 22, and the third chair representing 3, Nigeria, South Africa, and Angola. So, which out of 48 countries, 3 African chairs out of 25. Well, there is an issue of balance or unbalance, and even issue of representation. So if you want to be consistent, we say global financial architecture, the reform, yes, we need also to go further than that. And we see that at the IMF, there is now this discussion to have a 3rd African chair, which is good, we say. But if I remove all my hats of institution, just as a basic African, I will say it's not enough. We need to see to have more representation in a global stage. Having the Africa chair in the G20 is a positive trend, but it's 1 chair out of, while it's a whole continent, over 1 billion people, that is, and 54 countries. So those are the elements. So the issue of not only representation, but also equity or equitable representation, I think, is fundamental. Private sector, definitely, we believe that that's where we need to put more emphasis, even in supporting the private sector, developing also skills, health, education, what kind of skills we need to put, the digital, the energy, affordable energy. Those elements remain fundamental to connect it then to the private sector, especially for the youth. What kind of instruments we have been challenging the institution, IFC, MIGA, to come with more adapted instruments to address those issues for the country. So we need to have an institution that is really fit for purpose. We say the development is for the people. If you look at the trend currently of the various coup d'etat we have seen on the continent, if you actually, in my case, 6 out of the 23 are in a situation of political transition. But there is one constant when you see those coup d'etat. Basic thing, the youth is in the streets applauding the militaries. It means that something is not working. So is something not working because the youth do not have perspectives. You see in Sahel, what are the options? No jobs, no prospects, difficulty to go in other countries because of migration or illegal forced migration, or joining illegal activities, or doing terrorism. So is this the perspective we want to give to the youth, to the future? And the youth is today. In 2030, Africa youth will represent 42% of the global youth. So those are the chances. So when I say youth is the future, no, it's today, it's now. So that's where we need to have those institutions be more fit for purpose. And the representation is key there. Thank you.
Thank you very much for that. And I just want to come back to Professor Ndungu. And I want to reference the fact that President Ruto has been very vocal when it comes to Africa's green growth and investment agendas. And it's clear that this offers very good opportunities to bring in the necessary financial resources and also to put Africa on a climate-forward trajectory. The question then becomes how this plays out in practice, and what do you think needs to happen in order to ensure that these investments don't just come in, but are sustained, so to speak?
Yeah, thank you very much. And before I get to your question, maybe I think at the end of this session we should have some structure. The DNA of where I've just come from, I was heading the African Economic Research Consortium. And by the way, it was started in the 80s because we wanted to create capacity for African economies, because structural adjustment was misunderstood just because of inadequate capacity. And everybody put in resources. So we can say we have capacity. So we need to ask ourselves, can we document what are the consequences of the current financial architecture? And we need a logical sequence just to see that when we change or when we advocate for change, we are advocating for change because there are tangible results that can be seen. Let me give you two examples. One is actually coming from the World Bank. The theme of next year's World Development Report is actually the middle income growth trap. Why middle income stagnate? And look, we are talking about African economies. Just go across all African economies and tell me, even those who are champions so many years ago, what has happened? I'm not saying it's the global financial architecture, but I'm just giving an example of what may be the problem right now. My colleague here, my minister for Egypt here, is talking about the same thing. So in a sense, we need to document that, and it has to be a logical sequence that gives us an answer. Second, we are actually advocating for resources in terms of scale. My executive director here has said speed, flexibility or fit for purpose, and also concessional. But it was not available then. This is what we are asking for. What happened? Most countries went into the international capital market. What happened? So I always give examples. Let's say, for us in Kenya, the elephant in the room is always the June 2024 Eurobond. In 2024, there is about 20 billion of Eurobond for African economies. But Kenyan one is 2 billion, so it's a large component. It is causing jitters. Now, just imagine, this was contracted in 2014 at 6.5% for 10 years, and you pay back as a bullet. In the current age, you would think, how would you do that? Now, just let's compare in the advanced economies. They would get 20 billion at maybe 0.05% or something like that for 40 years. We are getting it for 10 years, and you repay it in a bullet. You wanted to finance development. Just make an assumption, what were you going to finance? Suppose it was a road infrastructure. It will take you maybe half the time to get it done, but it can only be paid by the stimulus, the development stimulus that comes out. Just see the picture, because we need to repackage this and say the failure of the international financial architecture has produced this kind of outcomes. And that is the issue that we really want to deal with. Those are the two examples I want to give so that we package some logical sequence of that.
Professor, just to stick to that a little bit,
Yeah.
What lessons have you picked up from that situation, the borrowing of 2 billion, 2014, 6.5%? I know you're pointing to the financial architecture and what is not working, but tell us a bit more about how it could have been packaged better.
I raised 4 issues. First, it was, of course, the scale. That scale was appropriate. But we have a problem in terms of the tenure. We have a problem in terms of the rates. And we have a problem in terms of the conditions surrounding it, because that interest rates will change on the basis of risk profile. Right now, it hit up to 20%. It was 18 just 3 days ago. Now I think in 2 days, by yesterday it was around 14%. Just imagine what we're really saying. We are really saying that the moment you go there, the moment you go to that market, be prepared to face those consequences. Secondly, what we are really saying is that the kind of projects, financing development projects or public goods for that matter, the returns on those public goods cannot help you repay back. It has to depend on so many other factors. But the bottom line is that why did African countries go that route? It's because of the current constraints in terms of the financial architecture. Now, coming back to your question, the whole issue of climate change cannot be divorced from development. It has to work together. But what is also happening is that realization that we need to take some drastic actions creates some opportunities in itself, massive opportunities. The Kenyan case is a good example. Let me give 2 examples. One of them is renewable energy. We have seen breakthrough in technology. About 93% of Kenya's renewable energy, Kenya's energy can be is renewable. Right now we are using about 70%. With breakthrough in technology in terms of how you store renewable energies, which is coming out very, very, very well, we are so happy that this can be a good market. It can ignite industries. I used to ask many years back, how can you talk about industrialization when you have even energy constraints? In the 90s, we went throughout the country in Africa, headed by the World Bank on enterprise development. And every year we were interviewing farms. And the first point of complaint in terms of their constraint was energy. Not only cost, but frequency, and the cost of outages. There are so many things we can do. The second thing is new markets can be developed. Carbon market is one of them. We can debate about whether it's carbon pricing or carbon tax, but for us, carbon tax increases the tax base. So essentially, we would like to go that carbon pricing price is always an incentive, but tax is actually going to cater for externalities. And we do believe that that's something that we can do better. So why this interest is coming up is because even the other aspect of it, every time we talk about debt to GDP, tax to GDP, is because the GDP is the way it's measured. In Nairobi, the whole idea came up that we need to, once we recognize our environment, we need now to go back into natural resource accounting and try to see whether there's something we left behind on the basis of this, the way we count our GDP. And when we start doing that, we start maybe improving our profile, but more importantly, start making sure that we can program our natural resources in terms of how we use them. Talk about climate change and development separately. They are just the same thing. It's a continuum of the same thing. Now, it comes in with a lot of realization because of the constraints that you face. I was looking at it in terms of 25% of our GDP comes from agriculture. It takes about 80% of the rural population. We are known for smallholder production in terms of aggregation. Whether you want to talk about tea, you want to talk about coffee, you'll find that the smallholder, so many even senior people in the world today had their PhDs in some of those aggregation. But all of a sudden, there is a drought that wipes out everything. We lost in the arid and semi-arid areas, we lost 2.5 million heads of cattle. Those are assets of arid and semi-arid groups. What are you going to do about them? It is the effect of climate change, but just imagine how their stock of wealth has actually been wiped by a single drought, which is quite devastating. So that's why we are saying whatever instruments we bring in has to take that part of the argument. We have to look at the land, we have to look at agriculture, we have to look at water management. And we want to make sure that that continuum is fixed because that is where we are. That is why we are saying climate change and development cannot be divorced anymore. I was giving that example just to show the clarity of it. But look at the stagnation of also of the economies in the Horn of Africa, for example. Yeah? In one of the studies we conducted with the Brookings, We were actually, one of our papers was that look at the Horn of African economies and try to look at the mean temperatures and tell us whether they are to the right or to the left of 1.5 degrees in terms of warming. Unfortunately, we found all of them were to the right. So it means it's more than 1.5 degrees warming. What does it tell you? It tells you the volatility or the vulnerability of climate change. We cannot predict when El Nino will be hitting or drought will be hitting. Just to give you a latest example, we had a meeting because we have this prediction there will be El Nino in Kenya and it is going to destroy the harvest, the bump harvest that we have had. And we started packaging measures. In 1 week, we are all packaging what measures we are going to deal with so that we help the farmers, even reduce the post-harvest. The next week we met, the predictions were showing something totally different, and everybody dropped even the budgets they know are doing, and I don't know what has happened since then. So you can imagine that you cannot even predict. So essentially, how then is our planning? That's why I'm saying we go back and say, let's look at climate change and how it can influence economic activity, and how do we have a logical sequence of policies and packages and information that will help us deal with that. We cannot divorce from that. That's why I started from markets, but you can now move from there to actual production and productive activities that are influenced by climate change, and we'll see that smart agriculture itself will support climate resilience and all that. So in a sense, that's why everybody is talking about, let us invest in mitigation. Let us invest in adaptation. Let us strengthen our resilience through different activities and even programs that can help that.
Thank you very much for that, sir. Hanan Mosi has been listening to everybody speak very patiently, and thank you very much for that. Hanan is the Deputy Executive Secretary and Chief Economist at the UN Economic Commission for Africa. First of all, if I may start with you, and I want to spend a bit of time with you because of how much you bring to the table. I just want to first of all start by asking, the minister from Egypt, Minister Maiti, says there's a need for African institutions to work together. How do you achieve that? How does that look like? And how do you make it happen?
Thank you. I think it's a very important point regarding voice, agency, and collaboration. And it's, I think, one of the things that we are actually making progress in, for example, in the Africa High-Level Working Group in Global Financial Architecture, which brings various players. It brings the ministers of finance, African ministers of finance, economic development and planning. It brings partner institutions, the African Union, IMF, World Bank, African Development Bank, Afrexim Bank, to actually talk and discuss, reforms, build consensus on what the African asks are for reforming the global financial architecture, and how we can advance the agenda and push it forward. And we have been also, discussing, this is one, where we are is an example of how we can bring these voices as well. So this is the type of work that needs the whole village, as we say. We have these asks that have been well articulated, agreed on, built consensus on. We have tried to amplify them, whether through G7, G20, in various meetings here in African Caucus. And we need everybody's voice and agency to get them done, because we are beyond reaching agreement. Agreement has been reached on what needs to be done. What we need is action. And the discussion here brings me to, I think, the need to change and reshape the narrative. I think we need to go beyond, why should everybody care about it? Because I think part of why should everybody care about it is that it implies the future for everybody, not just Africa. the fact that Africa will represent 40% of the global workforce by 2100 means that if you don't invest now, if you don't fix problems now, it's not just Africa that will be affected. It has implications. Africa has also solutions to many of the problems that we will be facing. It has 60% of the world potential for solar. It has a huge potential for sequestering the global needs, a third. So tackling the issues of leveling the playing field for Africa to have a better future and a better chance means it's a better chance and future for the whole world. And we need to kind of address all these other fallacies about not much can be done because everybody is have to deal with their own domestic problems. Everybody is just absorbed by internal issues and cost of living crisis. Well, there are many things that are possible without crowding out much of the domestic needs, like underutilized SDRs that can actually be put to use for better use, rechanneled through MDBs to scale up, to lead to leverage. So it's not a valid excuse, and we need to be vocal that this is the case. There are other things, and it's not just money. There are changes in regulation that will make a difference. So we have to be really forceful about these issues, because this shapes the domestic narrative about, we are dealing with so much, we cannot, devote much to Africa or to, developing countries, but this is not true. There are things that are low cost that can be done. There are guarantees, and we've heard already the minister say how such guarantees can actually help lower the cost and enable financing. We have seen before, for G7 countries doing these guarantees for political reasons. Why we cannot have it for, global public good, for climate and green issues? So we have to push the agenda to get things, even with limited resources. A lot more can be done. Underutilized resources like SDR has to be tackled. Guarantees can be a cheap way of actually supporting countries to scale up financing. We can have changes in regulation that can enable this to scale up, whether it's about cross-border carbon trading, or it's about how the credit rating issues are integrated in Basel. There are so many things that can be done that would make things better and low-hanging, but yet we have not seen movement, and we have to break the cycle.
Yeah, I just want to push you a little bit on the SDRs and how to make them more effective. Could you just unpack that a bit more? What needs to be done in order to make them more effective?
So we have currently more than 450 US dollars in SDRs that are underutilized. Let's start with that. And the amount of things that have been promised to be rechanneled have not been fully rechanneled. And these we're not talking about much. We were talking about 100 billion. So, let's start maybe a step back. The SDRs, the IMF special drawing rights, were intended to deal with long-term liquidity needs globally and to be issued to tackle that. Yet, in the cycles that we've seen, like 12 cycles of assessing this, we had 4 issuances despite of regular ones and 1 special issuance. And despite having sometimes the global fundamentals actually necessitating an issuance, but because of the political process for it, it doesn't get done. Okay, and there are at least 2 cases where this happened. One under the Camp de Sceaux and the other during the European crisis, and yet this was did not go through because it needs 85% majority. So it doesn't take much to get it blocked. It can be just one shareholder that can do that. So one of the issues is how can we actually have the process? This is similar to a Federal Reserve Board. Do you need a political agreement in a Federal Reserve Board to decide on what is type of liquidity that need to be issued? So there needs to be an analytical framework that at least guarantee the minimum needs of the global system and reduce the discretionary and political element of the decision. That's one. Two, we need to find ways to actually enable that rechanneling. Currently, one of the issues that have hold this is the fact that it needs to go through like the internal legal system of each country that want to rechannel. Even if sometimes we had, I can think of 2 heads of states, okay, that were very keen to do the rechanneling. I can, mention France and the US, but yet we did not have rechanneling because even though there is commitment at the very top, there are internal processes that are required that don't enable this. There need to be ways to simplify that. And more importantly, for example, even when we had this good proposal that is put forward by African Development Bank and Inter-American Development Bank to enable rechanneling through multilateral development banks, it requires 5 countries to support it to be operational. As of yet, we don't have 5 countries. I think that's worrying. That the fact that.
Okay. Again, why don't we have 5 countries?
Thank you.
Why don't we have 5 countries? Minister, what's going on? You have 2 countries represented here. No. I know, but why don't we have 5 countries? I mean, this doesn't make sense to me. Please allow me to ask daft questions because I'm not a finance guy. I'm just a journalist. But why don't we have 5 countries? Minister, would you like to answer that? What do you think is going on here? Yeah, and again, yeah, absolutely. We have to congratulate both of you for being here. And confer as long as you need to, but why don't we have 5 countries? Again, that's a journalist asking what should be a very simple question because it doesn't make sense to me. What is the issue that needs to be overcome so that we get to the bottom of it?
I thought she was referring to the rechanneling of the SDR, isn't it? It means that it is the 5 countries that are holding the SDRs that are supposed to take position in terms of.
Okay, so what is required here? Is it advocacy? Should we be asking those? What needs to be done in order
Minister,
to have those?
If I may chip in, I think Alan is asking, why don't you have 5 of your counterparts in the countries that need to make the decision,
that is my
making
question.
that decision?
That is my question. Thank you for helping me with the English. But still, that question stands, that what sort of advocacy needs to be done? Who do we need to sit down across the table from and talk to? How do we approach them? Someone out there might even ask, well, no, I shouldn't be asked, that would be extremely inappropriate, but what needs to happen in order to shift things?
I was thinking this is why we are meeting here, because we need to have a logical sequence of how the impacts and how we can turn the tide. Because essentially without that, you cannot have a very forceful campaign.
So, Prof, I'm very familiar with your work. I know you from your days at the bank. And I am going to give you the responsibility of giving us an action plan out of this meeting. How do we make sure that we have 5?
We are going to get there. You are right. We are going to get there. But because I wanted to add one more thing. By the time we start complaining about the international financial architecture, what have we done to our own domestic financial markets? And the crowding out story becomes very, very important. Because essentially we forgot what is happening at home.
That's a very scary question for a lot of people.
Not scaring because it's our problem. That's where the fire is burning. And that is where the fire will burn you. I remember in around 2000, we argued that you're asking governments to tighten monetary policy. but the main borrower in the domestic bond market or even credit market is actually the government. And so it means you influence the interest structure, but that same instrument is supposed to contain monetary policy. You have a target for inflation, then can ignite protracted recession. So in a sense, we also have to start with one factor about the domestic markets, what has happened. What I was saying is that we have to repackage this sequence of issues in terms of the effects, so that when we move into now the platform for discussion, we have a sequence of impacts, and then we now say, for us to remedy this, this is what needs to be done. That's the point I was making. But I wanted to add one more thing, because I thought nobody has mentioned the domestic market. And now that you mentioned that I was there in the central bank, then it is good that it comes out. But actually, the issues I'm raising actually are way back, even before I joined the central bank. It is a combination of watching so many effects and experiences that is making us talk about from this position where we are. There are historical legacy issues, but there are also, as we look forward to where we are going, things are going to become messier and more complicated. We have to take charge of that. That's what I'm saying.
Okay, I'm going to come back to Hanan in a moment, but I just want to briefly open to the floor, to the House. I know there are some amazing ideas here. What would you like to say? Introduce yourself, sir, and make your comment.
Sure. Eric Polofsky from the Rockefeller Foundation. And I just wanted to note the answer to your question is political will. Political will.
From who?
Currently there is inadequate political will to bring together 5 countries to provide SDRs to get the AFDB, IDB proposal off the ground. You need 5 countries to provide the SDRs and 3 countries to provide agreement in a liquidity support agreement. And I found you narrowing on the ministers. But ironically, the minister of Kenya led a meeting yesterday with the Rockefeller Foundation, with the AFDB, with the IDB, and with the Center for Global Development, with the Minister of Egypt's colleague from the Ministry of International Cooperation, to have a detailed private conversation with countries with SDRs. And the process is moving slowly because there isn't enough political will.
So what does political will mean in this sense? Where is it lacking?
You are insisting to ask difficult questions.
No, I don't mind the difficult questions, but the challenge is that by narrowing in on individual countries while we're in the middle of the process means that they're less likely to say yes. And so I think the ministers are gently trying to avoid alienating people we need their agreement of. But the fact of the matter is, I don't want to avoid the question, right? There are countries that have SDRs that are not being used that could be used. And there are countries that are very seriously considering these proposals. But we're not there yet. We need more pressure. We need the alliance in this room to bring more pressure on the key governments.
Okay, I'm going to, Madam,
no,
please.
I have one comment.
Shall we?
I'm sorry. Because all of us are trying not to go directly and answer this question.
And I'm finding that very difficult.
You know why? It's a political issue rather than anything else. I personally tried. And when I found the answers are political answers, I found that it's not easy to move anywhere. So it will stay as the world politics as it is. Thank you.
Madam.
So everything that everyone said is true. There is...
Do you mind introducing yourself? Yes.
Sorry. My name is Kalpana Kochhar. I'm the director of the Development Policy and Finance team in Bill and Melinda Gates Foundation. So everything that Eric and the ministers have all said is true. The proposal, you remember that the rechanneling proposal was initially made, the rechanneling offer was initially made by advanced countries. This was France that stood up and said they were going to do this. Many technical issues were raised and actually have been largely resolved. There's one at the European Central Bank that still hasn't been resolved. You don't want to name countries, but it's I'm not. Everybody knows the U.S. had also pledged, but it got stuck in Congress. But maybe the good thing is nobody's walked away from the proposal. They all think there is a possibility here, so that's good. And everybody is waiting for someone else to move first, which is not good. And how do you move that? I guess you keep working on the technical side, which, as I said, most of it is resolved, if not all. But you keep the advocacy up. And I wasn't at the meeting, but that Eric was talking about. But I believe maybe there's one or two more issues, including the IMF's board decision, that there's all the technical issues are resolved. And maybe that'll be the one that moves it. So we may actually be closer than we think.
The good news is we are closer than we think. That's a good way to advance this conversation. I've got Patrick from the African Union Commission. Patrick, could you he's joining us by phone, by the way. Could you just introduce yourself for the sake of the audience, please?
Thank you very much, and good morning to all the ministers and colleagues that are attending the meeting. I am Patrick Nzana Olomo, and I am the head of Economic Policy and Sustainable Development at the African Union Commission. And we are mainly working on this issue of global financial architecture combined with other prominent issues.
Okay, Patrick, if I may ask you very briefly, and this is really a technical thing, are you plugged into anything? Do you have a headpiece on or anything like that?
No.
Okay, you're speaking directly into your phone.
Yes.
Okay, thank you. Go on, please.
Thank you very much, Alan. I've been listening to the conversation, and I think we have certainly reached, a turning point in terms of what needs to be done to, to make the continent moving forward. And through a conversation, I saw that there is a consensus on the need for, sequencing our actions going forward. The first sequence is the short-term interventions that we need to do, and to achieve. It is to address the liquidity problem that we are all faced with, and all our countries and ministers that are sitting in the panel have highlighted, the issues that they are having with liquidity. But at the African Union Commission, we are truly willing to focus on long-term issues, to break the cycle that we are seeing, happening over years. When we talk about, breaking that cycle, it means focusing on total economic transformation of our countries written in the Abuja Treaty and reinforced by Agenda 2063. And in this regard, and I would like to echo the words of Minister Ndungu when he talked about the importance of agriculture. Agriculture is certainly key, but there is need for us to also focus on issues of industrialization and, productive transformation in the service sector. And on this, we are really convinced that if we are able to level up, our ambitions and interventions at that level, we will be able to unlock the potential of the continent to address the challenges that we are faced with. We have to be mindful, Alan, of the fact that Africa today is certainly the world investment frontier, because with the youngest population of all the continents, we see that the median age of the continent is 19 years compared to 30 years in Latin America and 42 years in Europe. This population will represent 2.7 billion people in just 2 decades from now. So it is certainly one of the huge investment frontier and investment market in the world that we need to make sure that we highlight wherever we are able to do so. Because when we look at the political dimensions that you highlighted, there is need for us certainly to come together and to make sure that we abide by the common positions that we have in terms of global and even continental negotiations.
Okay.
Because at a global level, we need to make sure that we have a stronger voice, and that we are able to speak in unity to accelerate progress towards economic transformation. And at national level, ministers has highlighted the need for structural reforms, reforms that are going to aim at harnessing the potential of the domestic market. Because the African Continental Free Trade Area today offers a market of 1.3 billion people. And I said with an expected 2.7 billion people by just 2 decades of now.
Okay.
Look at the investment landscape.
I'm going to have to ask you to summarize as quickly as you can, Patrick, so that, unfortunately, the time has become a pain. But yeah, if you will.
I'm summarizing. So Minister Ndungu just highlighted the fact that there is need for us to focus on the internal market, and he's absolutely right. Because when you look at the data today, you will see that if we are able to harness the domestic resources that we have, we will certainly be in a position of accelerating progress. The financing gap that we have as of today is estimated as at 272 billion per year. And this represents only 0.2% of the global assets under management. And at the continental level, this represents only 10.5% of the resources that we also have, within the continent as, global assets under management. So you can see that there is room of opportunity. And at the African Union Commission, we are working, harnessing those resources with the support of. Thank you.
Thank you very much. Thank you very much for joining us. It's taken quite an effort to get him, and this is at an airport somewhere, so we are really glad to have had his intervention. I just want to come to you very briefly, introduce yourself, and make a very brief remark. The gentleman there, very briefly, so that we can summarize with the ministers who have to leave soon.
Yes, thank you very much. I'm Philip from the German office at the World Bank. Annalisa was saying, luckily they didn't put Germany on the on the name tag. The seat would have been even hotter. I just wanted to maybe first start by saying we have a real convergence of goals at the end that we're going to go to. There's a political moment to acknowledge, and also, as the minister was saying, that we have a new paradigm of assessing what our wealth of the future will be like, and this is an important moment. I want to sort of put all of us a little bit in a discomfort zone, maybe. I sometimes imagine myself making my arguments to a mirror, and I think there's a bargain that we have to strike between different parts of the puzzle. So first, when I reflect about countries that are having challenges, the instruments that we have at our disposal, they do depend on the way we implement them in countries. So there is a question around.
So countries need to get their act right. African countries. This is what we mean.
What I'm trying to say is that there is a responsibility of how we implement, for example, that instruments. Then the bank, and we're discussing this, we are on ads and management's back on improving the bank, being more agile, being responsive to clients. But then obviously there's a responsibility for us as donor countries, as countries that have a historical responsibility for dealing with the issues that we are facing. We are trying to play our role, and I think it's for us also to align those G7 plus countries that need to acknowledge that there is a responsibility to take over. And partly this could be with SDRs, but I want to say SDRs is a funding mechanism. There are other ways to fund as well. But I think that's the bargain we have to strike. All of us look into the mirror. Are we making the right? Are we using the instruments we have at our disposal in the right fashion to go towards the ends and common goals that we have collectively agreed upon? Thank you.
Just so you know, before I come to you, the ministers, I'm looking for someone who can help me speak plainly, someone who can help me get to the bottom of the political problem that needs to be shifted. I'm going to come back to that in a moment. So just if you feel like you can provide me with that answer. Oh, excellent, excellent. I'm coming to Karim in a moment. But let me, because the ministers have to leave, I would like to start with you, Minister Maid. Ultimately, what are your final thoughts on this whole discussion? And ultimately, what are the action, what's the way forward? And in terms of action, very specific bullet points of things that need to be done.
From practical point of view, I have been working for the Ministry of Finance for 17 years. I believe for African countries, we need to strengthen our African institutions and give them a chance to play more and more important role in our life. I believe that there is an opportunity to increase their capitals, to enhance their capabilities and their institutions. We need to unify our demands. I need to say that we need to also coordinate our voices with international institutions.
Okay, so how do we do that? Sorry. When you say institutions, first of all, you're not just talking financial institutions, you're talking...
I think United Nations Economic Commission for Africa played a role in that. For the finance ministers, with all the meetings, we are together, we discuss, and we are always trying to come up with a unified position to present it to the World Bank and to the IMF. Let me say that I think one solution will not fit all and will not give us the solutions for our challenges. And this is the reason why I'm saying that we start from our home. We start from Africa. And by strengthening our African institutions, I give you one example. Egypt, for example, was not part of many African institutions, which we decided to join in the last 3-4 years in order to strengthen and benefit as well of these institutions, which play a significant role. I personally have seen how African Exim Bank play a significant role in pushing and meeting the African needs. Not only within Africa, we also can play a role with other regions. I believe that if you look at the example I talked about at the beginning, when I said, I'm going to issue next week Banda bond in China. The guarantees I got from 2 regional banks, African Development Bank in Africa, Asian Infrastructure Investment Bank in Asia. So we have to encourage such cooperation, can play additional role in that. But let me say that one of the experience I personally would advise, because Egypt is under stress and the challenge, is to think about outside the traditions, outside the box, and look for alternatives. I've been under this stress for 4 years since the beginning of the pandemic, 2020. So I tried with green financing, with the sukuk, with green loans, with Banda, with Samurai, with all of these alternatives. And now you've got others. So we have to think outside the Eurobond, outside the traditional capital markets. This will help as well. So I believe the practical implementation of solutions should be the way forward. In addition to that, we have to strengthen our capabilities. For example, I think the African trade free zone, we have to activate it. We haven't yet. So we have to activate it, and we have to ensure that what we put on the paper will be reflected for the benefit of the continent. So we have drafted a lot of laws, a lot of agreements, and we need to activate all of these in order to help the way forward. Also, we have to work with the World Bank. The World Bank and the IMF and the other international European financial institutions, they worked with us over this difficult time. But what we are saying to them, please, difficult circumstances need difficult decisions, need alternatives. Don't make it business as usual, because this is not a usual circumstances to deal with us as business as usual. It needs a lot of work from you. And I believe that one of the issues which I would like to raise, and it should be taken into consideration from our experience, the guarantee. If I look at the guarantee which we have been through, blind financing, from our experience, the impact of the guarantees is not fully captured. And the pricing does not fully reflect the improvement in the credit risk profile of the guaranteed transactions. they underlying the risk of the borrower, not the credit of the institution who provide us with guarantee. So it remains that the impact of the risk of the borrower affecting the transaction. This is not a solution. Why I went to for guarantee? The same for green financing. The pricing of green financing is not that difference from the normal Eurobond. Why you are asking me go for climate change financing, go for green financing and green bonds and others, and eventually the same cost. Even, by the way, it's more costly. Green financing is most costly. You know why? Because the conditions you put on us, it costs us more. I need to hire people who are specialized in that. I need to hire consultant who will make the review. I need to publish. I need to get a review. All is this an additional cost. So, sorry, you are telling something, and the reality is something different. So we have to come to the reality. The reality is I issued a green bond, my experience, more costly than traditional Euro bonds. Because the additional cost I have to pay later, and the headache, and the revision, and the consultant, and we have to go for the World Bank, please help us to issue the report. So they say, okay, go to this consultant, and hire it, and pay for it. Again, the practicality on the ground is telling us that the international financial institution is doing business as usual. The world is not at usual time. It needs from you more practical solution in order to feel that all of us are facing the challenge. Not only the negative impact of the war, not only the negative impact of the high inflation and the crisis of food and the energy, not only all of that, the climate change cost is huge. Who gonna finance that? You are telling us, go for green energy, go for green water, go for green transportation, go for blah, 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 blah. All of these very high cost to move from traditional type of transportation to the green transportation. It means I have to invest hugely in this type of transportation. And eventually, the financial market is not there. High cost. They don't regard that I'm borrowing to finance climate change. Nothing. It's the same price, the same cost. I'm sorry to say that. We are saying in such meetings very good words and very good promises. But when we face the reality, it's very hard and very tough. Thank you.
Let's give him a round of applause for that submission. And I wonder, Professor Ndung, whether you have anything to I'm sure you have a lot to say as well.
I have, as usual, I would have a lot to say, but you see, I'm limiting myself. I think I've listened so well, but I think you asked a question that is political problem, or political in nature. There is a political problem, but we have to seek a solution. And I'm very happy that, for example, what my friend there, we were in a meeting together, on talking about the SDR rechanneling. 2 or 3 countries on the table just said they had already rechanneled 20% of their SDRs to support the COVID-19, isn't it? So in a sense, they say we are now constrained to do this, to add more. Well, it's a matter of saying what are the constraints we have to lay out. But I still go back. Let me start maybe in a better way. Almost maybe 3 weeks ago, we were in the United Nations General Assembly. And one of the conclusions that was arrived at is that the SDGs are off track. And we only have 7 years to bring them back to track and achieve them. I think there are 2 things: bring them back to track and then achieve the SDGs. I think miracles may happen, but I think this is where the political debate starts. How do we do that? And that's why I started by saying we have to come back into what practical solutions are serable, and how do we repackage those practical solutions from the impacts that we have seen. The Minister has emphasized a lot of impacts. I talked about several of them. including even how we have maimed our own domestic financial market. Because essentially, once you're desperate, you start by looking for local solutions before you go out. Once we have a sequence of impacts, and then those practical solutions are actually following that sequence of impacts, then we can actually now talk about what do we anticipate with these solutions. One, the most important issue is where we'll be in SDGs, where we'll be in the development or even poverty eradication in those countries, where we'll be in terms of avenues or even indicators of climate change and resolutions for climate change. That is, for me, the selling points that we can actually repackage, and this can work very well. That is why I'm saying we have a lot to say, but we have to have a logical sequence of how we are going to tackle the political problem by having some logic in terms of how we repackage the reasoning behind it and what is the ambition of the solutions that we are proposing. I guess we can have such a structure. Thank you.
Thank you very much. Let's give both ministers a round of applause. I think we've benefited a lot from their presence here. I just want to, as I was looking up, I noticed that ACET was walking in, and we've been tackling this issue around SDRs and making the SDRs work. And ACET, as you know, is from the African Development Bank. She does a lot of important work there, but she's been spending a lot of time on making sure that these SDRs work. I just thank you for joining us. You may want to introduce yourself a bit more, but I think the key question to you is, where are we now? We've heard that there are 5 countries that, I'm not going to say are being stubborn, but there are 5 countries that won't shift, but Professor Ndongo has made a very important statement there of saying that, trying to explain where they stand. But where do you see things? Where are we now? And how do you think, what do you think ought to be done in order to shift things, to advance things? Because hopefully what we'll leave this place with is action plans and not just more conversations about more conversations.
Thank you very much, and good morning, everybody. A pleasure.
I'm sorry, before.
Sorry.
And ministers, if you are pressed for time, we do appreciate the fact that you've allocated us so much time. And let's again give them a round of applause as they leave.
Thank you very much, and let me first thank the Honourable Minister, for his support with regards to SDR rechanneling, also the support of Egypt for SDR rechanneling through multilateral development banks. And I fully agree with the comments that you made on green bonds.
Could you move your microphone closer?
Sorry. So I fully agree with the comments that you made for green bonds. Green bonds is nice to have, right? But it should not be a priority for a country, because as you rightly say, it is costly. You might get maybe 1 or 2 basis points extra because it's green, but then the work that you need to be doing, you need to have the green bond framework established. It needs to be rated on a regular basis. You need to do a reporting on a regular basis. You need to do an allocation. You need to look at the pipeline. It is costly compared to the savings that you're getting from it versus a regular bond. It is an excellent product from an investor's point of view, but from the issuer, it is not that simple. And I think that the green bond market is not at the maturity that it needs to be, because in reality, if you are an investor so concerned about green, you should put social return before financial return. And the number of investors that do that, because there are some, we don't have that critical mass yet. So they are going to say, I need first my financial return, then I look at the green. But it's not something that I would personally recommend to to African countries. I would recommend that to let's say issuers from most developed countries. For example, for the African Development Bank, we do green bonds because we do already have a pipeline. We already have a reporting mechanism, and we're seeing more investors coming into our issuance. But it's not there yet. So I fully agree with your comments. before an African country does a bond issuance, the country needs to look at the various possibilities. I mean, yes, green Eurobonds provides visibility, but there is a syndicated loan market. You can put commercial banks together. You can compare, where are you going to get the best of resources from. But, this is something that I wanted to say. With regard to the SDR rechanneling, it's been a longer process than anticipated, but I think it's worth it because the benefits that can come out of it are just tremendous. Because if you have, and one thing that I need to say is that when we looked at MDB receiving SDRs, we didn't do it for the African Development Bank. To us, it was SDR rechanneled through MDBs, all of us. And today, if the MDB system received $100 billion, it's at the very minimum $400 billion that can be put back into the real economy. And this is something that is quite important. So where we are, very good progress with the IMF. They're on board. What we need right now in terms of critical steps, we need to have the countries that are interested in rechanneling and also the countries, the recipient countries, to say to the IMF, please give an official position. We need to have your official position now. We're getting your official positions during the discussions in the G20, in the corridors, in some of the meetings, but we want it out there in the media. And this is going to, because there is some internal work that needs to be done by the IMF. We understand that it's not a lot. It's just having an instrument approved, but it's a very important step. And my sense is that if we have that official stance, and that's something that we've heard from some of the countries, it's going to help bring more countries into this. So very good discussion, a very nice announcement from France yesterday, which was really really excellent. Participating in the scheme at another level, not rechanneling the SDR, but going through the liquidity support agreement, which is part of it, and which we absolutely need. Conversation also we still good with Japan, with the Kingdom of Saudi Arabia, which clearly indicated the IMF needs to come out. Good discussion with the United Arab Emirates as well. And that's it. I mean, China is a no. Canada is saying, oh, we've allocated, the maximum that we can allocate. The European countries still saying, oh, but, it's the ECB ruling, which is fine, but we devised a proposal for the countries that are constrained by the ECB ruling. And, France was able, that's the reason why France was able to come in, and we need others to come in. So we need to put pressure on them, because it does not cost them anything. Zero cost to shareholders, to the taxpayers, exactly zero. They reallocate through MDBs. They are still able to account for it as reserves, right? In terms of, like to me, I mean, why are we sitting here talking about the G20 reforms, etc.? We need to do more, etc. Where you have a perfect solution for you that doesn't cost you anything. We're not asking for more grants, and you're not using it. So the same way that they're asking multilateral development banks to be innovative, to transform, they need to be innovative and they need to transform. Because if this doesn't happen, it's going to continue. It's going to be the same cycle. I don't know what type of global goals we had before the MDGs, right? But we have the SDGs. We're going to have something else. But if that reset doesn't also happen at the shareholders level, we're just going to carry on things for our generations to continue. So let me stop here.
You deserve a very loud round of applause, I think. Why is China a no again, sorry?
They said no. They said that, so because, I mean, we were quite encouraged by the 10 billion allocation to FOCAC.
Yeah.
But China's stance is, we think that MDB should get a general capital increase.
Okay. And finally, before the ministers leave, I'd like Karim to make a remark as well on this issue, because there is a political element in all this, and how do we shift that?
If we want to shift it, it was said by the minister, this is about change. Change is about leadership, it's not about technicality. Change is about leadership, not about technicalities. So you need to decide and do it. So the question here is not, you know, we've done great job, you know, with IDA and leveraging the money, leveraging the resources, inventing instruments, etc. So you reach a point, but if you want to reach another point, you need, it's a rebirth. So we're talking here of a rebirth of those institutions, if you want them at scales and more efficient, closer to the private sector. So the main shareholder have to decide what they want to do. I mean, that's the issue. And this is linked to the changes at the geopolitical level. So there are spaces that have been created. Actually, we are having this discussion because things have been moved. So it is an opportunity. They will have to tell us in a way. I mean, we're part of the cooperative, but the largest shareholders will have to tell us what they want to do with this institution. It's as simple as that. And everybody is observing. So China says no, the US puts a little bit of money, etc. But at some point, it's going to be what we want to be. So it's about leadership. There was leadership in 1945 when this institution was created. So that's what we're talking about. It's a moment that will polarize politically. Of course, it's not for ministers and central bank governors. This is dealt at heads of state level. It's a NATO type of discussions, etc. So, and I'm pretty optimistic because the legitimacy of this institution is not in question in Africa. These institutions are needed, and we want them stronger. Of course, they can't provide the response to all the financing needs. This is the private sector has to get in. I'm not sure they are fit to deal with the private sector in terms of culture. I'm a pensioner of the World Bank, by the way. I spent 10 years there. Even the IFC. I'm not sure they can be the catalyst to organize that. They can try. We can create, sister institutions. There are ways, there are ideas that are floating. We don't have time here to discuss them. So in the end, you put your heart, your energy in what you want to do. If you don't spend time in doing something, it means it's not a priority for you. So today, we will increase the size by 20%. The SDR is nice. I think it's going to happen, etc., etc. But that's not listening to the ministers and to Moroccans, to the populations in Africa, to our governments. This is not what we're talking about. So if you want something else, you'll have to make it happen. Making it happen, it's to step in. It's leadership. It's change management. That's it. I mean, that's not very complicated in the end. But my worry is that we keep on going with these small discussions, SDR, yes, no, instrument, RCT, PRGT, how can we leverage every single dollar? Now it's leveraged by a factor of 2, we will do 3 or 4. That's fine, but that's not the ambition. So where is the ambition? We're listening, we're not hearing yet clearly. And you can't ask this to bank management or IMF management. This is not, I mean, they're trying, they're on our side, of course. Thank you.
Thank you very much. And finally, Mavis Owusu Jamfi from ACET.
So first of all, thank you everyone, but special thanks to our two ministers and our institutional partners who joined us. This is only part 1. Part 2 is focused on the task that the ministers have given us as African institutions, research institutions, and partners around the earth. So I just want to make sure that we've got you right. Number 1, you want to be very clear that African institutions have a clear role to play. And so we need to articulate our role in dealing with this issue. Number 2, you want to be very clear and document the cost of the current process and the impact of getting it right. And number 3, you want a clear roadmap on what the steps we need to take are to get it right. Have I gotten it right from both of you,
For
Honorable
the first
Minister?
one, sorry to interrupt. For the first one, in order not to be a theoretical statement and a practical statement, we have to call for the African financial institutions. What do you need from us as African countries in order to strengthen your role? They may say we need more capital. They may say we need more, support or enhancement or some further facilities. So we need to call on them. Please let us know. What do you need from us as an African countries in order to enhance your role and increase your capabilities to address the more and more challenging environment, particularly that I see from my experience over the last 3 years that the African institutions were capable to adhere beside us, to be beside us and to support us. We need to increase this role. So we need to ask them what are needed in order to do that. This is my...
Thank you. So for the second part of this discussion, I'm pleased to inform you.
Just
to
add one.
Yeah.
I emphasize on some analytical impact. Instead, what has happened? What is the impact? How do we correct this? Because I think those two questions give us some feel of the future, where we are going. Why are we going there? Where are we coming from? Where are we are? Where are we going? The persuasive answer is, the persuasive position is to say, this has been the negative consequences, but this is how to correct them, and these are the solutions. And I think that is extremely very good. I was remembering when I had somebody from Bill and Melinda Gates Foundation, when France announced that they would channel their SDRs, I think Bill and Melinda Gates Foundation, in my previous work, they asked, can you develop a proposal that we can actually use this to try and convince the G7 that they can do the same. So that is something that has started a long time ago, not long time ago, but the bottom line is that we have to put the reality on the table. The history, the negative consequences, where do we need to go? What do we think are the solutions? SDR is one of them, just like the previous speaker said. There are several, but I think that would be the first step to see that you make a difference. Thank you.
Thank you very much, Professor. You've tasked policy institutes on the continent with a very big ask, and we are all sitting here with our partners in the financial institutions, Minister Mate. So thank you. We will have Honorable Ken join us for part 2, but for now, on behalf of all the think tanks that have worked together and our regional partners that have come together on the Africa agenda, we would like to say a very big thank you to our 2 honorable ministers for joining us today. A couple of ministers could not make it. They've apologized, but they assure us that they will be here for the next discussion, but they will only come if we can show that we are making progress. So thank you very much. Okay.
Thank you very much.
Ladies and gentlemen, we will now take a coffee break at the foyer behind the conference room and reconvene in this room for our next session. banks, policy institutes, civil society development partners, and media. Alan Kasuja, the floor is yours.
Thank you very much and welcome back to this session. And thank you very much for joining us. Right now, as we begin to have what should hopefully be another very robust conversation, I'd like to introduce to you Mavis Owusu-Jamfi, who is the Executive Vice President, African Center for Economic Transformation, to make the opening remarks.
Thank you very much, Alan. So I'm not going to be long. I think the ministers, before they left, set us a very clear direction. Okay. On the one hand, they want to know what African institutions need to be able to help address the current challenges at the table. So we heard Minister Mate talk about what kind of support do African institutions need from ministers to be able to access the financing that they will then be able to reinvest in African countries. So it's a very, very clear question. Minister Ndung then said to us, I need you guys to do the analytical work to explain why things have not worked and what the impact has been, and what we need to do going forward to ensure that we have a much more robust impact. And they were also very clear that it's one thing focusing on SDRs. We kind of picked a number of issues in this framework that we are going to talk about. But I hope that as we talk through the issues in the framework, we are also a lot more open in thinking about what needs to be done over the next 12 to 24 months to get us back on track. So some of the issues that we're not discussing today, but I fundamentally believe is important, were issues around domestic resource mobilization. Where is it going to come from? We didn't talk about public finance management, but everybody knows that we have public finance management challenges. So there are a number of pieces of work that is going to need it to be done. Oh, and let me do my little plug. As Alan said, everything we are doing now matters, but unless it's investing in the foundations of economic transformation, none of it is going to matter in the long run. So what are the issues we also need to think about in that framing? So so Minister Njung made it very clear that if I want him to come to any more events, he's looking forward to an action plan that I sent to him after this discussion. So guys, we need an action plan. So at this point, I hand over to you, Alan.
Thank you very much, Mavis. She set us the challenge, and we shall hopefully live up to it. Now, I'd like to introduce the panelists to you today. Going to start by introducing you to James Mwangi. He's a co-founder of CPA. Thank you very much, James, for joining us. We also have Dr. Hanan Mosi, who's been very patient with us and has joined us for the last session and also for this session, Deputy Executive Secretary and Chief Economist at UNECA. We also have Ms. Elizabeth Sidiropoulos, and she is the Chief Executive, South African Institute of International Affairs. Thank you very much for joining us. And Hannah Ryder, CEO, Development Reimagined. Thank you very much for joining us, Hannah. And also, we have Hassatu joining us again from the African Development Bank, and Kaplana Kochar, who is the Director, Development Policy and Finance at the Bill and Melinda Gates Foundation. We shall have a very open discussion. It will be open to the floor in a few moments. But just to get us started, I'd like Dr. Hanan Mosi to make her opening remarks, and she's going to talk about reforming the debt architecture. By the way, the opening remarks are limited to just a few minutes, no more than 3 if possible. Thank you.
Thank you. And thank you very much. heads up that I'm sorry that I would have to leave soon. On the debt architecture, we've had a number of meetings, including ones that Mavis had attended. I think it has been already articulated in terms of the need to overhaul the current existing the G20 common framework to make it more predictable, timely, transparent, and effective, and to actually expand eligibility to include middle-income countries, because currently there is no framework for middle-income, similar framework for middle-income countries. We need to instill suspension of debt service upon application to the framework. And we need to have bolder use of IMF lending into official and private arrears. So these have been some of the things, in addition to establishing a comparability of treatment formula that can help expedite the process. So while there has been really broad agreement on these parameters, whether from the ministers and African policymakers side, the World Bank, the IMF, many other even like creditors, we have not had much progress. And in terms of moving on that and achieving these asks. And part of the issue has been this, kind of the geopolitical tensions impact on these issues, and that has not really helped in proceeding with progress, because you have also new creditors that see themselves as having to abide by rules they were not part of making. That has slowed the process. And I think also another, so there is a political element of, that need to be tackled, going to you and all the pressure you were putting earlier on the political aspect. I think among all the asks, this is the one that needs really a lot more political will and advocacy to get it to happen. And we need to also make sure that we have a system or a framework, resolution framework, that actually does not provide disincentive or discourage countries to actually do the restructuring preemptive before they hit a wall. Because currently the system actually has disincentives to that. So we need to really get at the bottom of the issues. And without really tackling these, there will be very limited progress, and we will see this kind of like case by case that we cannot afford to have. You cannot afford to have a case by case resolution when you have so many countries now at risk of, are at debt distress or high risk of debt distress. So a lot more action is required, and we were actually discussing or brainstorming yesterday, and there were some very interesting ideas. I'm sure like also Hannah can allude to some of those, but there were discussions about what can we learn from HEBIC that have helped at the time that we don't have now. And interestingly, one of the things that was said, not by myself, but one of the participants, is the fact that what helped at HEBIC was the global political leadership. The big names that really kind of drove the agenda forward, that we don't have these kind of, names that are whether in G7, G20 countries that are driving that agenda now, as we did in HEBIC, and that we used to have actually some sort of like shadowing of, ministers that were working on HEBIC issues for G7 wants to kind of make sure that these issues are, put forefront in the discussions. So there were many things that I think we can learn and we can advance. Issue of also reducing the, having some sort of a threshold on the cost of debt service after restructuring. To have clarity and to make sure that that's, it reaches a sustainable level that countries can actually have the space to invest in SDG and climate action.
Thank you very much for that. And then James Mwangi, driving green growth for Africa.
Thank you, Alan, and thank you to the organizers for putting together this very stimulating suite of conversations. I think I'll come at this question of green growth, firstly by linking it to the global financial architecture conversation we're having. I think I don't need to repeat the ways in which, as very articulately was noted, the global architecture today is holding back Africa in unfair ways. I think what I will focus on instead is the prize that the world is leaving on the table through that injustice. In other words, don't just do this because it's fixing an injustice. Do it because it unlocks massive benefit for the planet. And it's because of Africa's particular potential role in driving a climate-smart transformation for the planet by achieving climate-positive growth. And what does that mean exactly? And it's the work that the Climate Action Platform Africa has been doing in terms of trying to size and understand the size of the prize. It's recognizing that by virtue of our labor force, our young and dynamic population, by virtue of our rich endowments of various raw materials and natural assets, and by virtue of the superabundance of renewable energy available on the continent, I think Hanan already pointed out, 60% of the world's high-quality solar energy is here in Africa, and not just in the Sahara, it's literally all over the continent. That there are three levers that Africa can pull that could meaningfully affect the trajectory of the planet towards net zero by 2050. The first one is greening our own consumption and production for Africa's own needs. In other words, veering further away from a business as usual pathway and into a green first pathway. Now, very often the argument is, and it's a fair argument, that green technologies have tended to be more expensive than their 20th century predecessors. Firstly, this is increasingly not true. And secondly, it's only true if you focus purely on the capex. And so, for example, any analysis of Africa's energy access needs shows that indeed the upfront cost of really committing to a renewables first pathway, as Kenya, for example, has done, the upfront cost is slightly higher. But there is no analysis in which the levelized cost of ownership over time isn't substantially lower and the deployment time isn't substantially faster if we go with renewables. Simply because the fuel for your renewable energy infrastructure comes free from the sky every day. What does that do for volatility of African economies when you're no longer subject to the fluctuations of global fossil fuel prices? What does it do to your import bill as you particularly maneuver, shift your transportation fleet, for example, to electrics and so on? So it's these ways of looking at the ways in which, by virtue of Africa's endowment of renewable energy, a shift towards greener technologies actually plays to our strengths a lot more than remaining anchored in the past. But it does demand a global financial system that does not make those expenses higher than they need to be. It's absurd that it's more expensive to do a solar project in Africa than in Europe. And that's purely a function of the way that our capital structures work. And the result is less than 1% in 2022 of global solar investment came to Africa. Again, 60% of the potential is here. The second thing, if we do that first thing, if we actually green our own kind of production and consumption, we come to the question of green competitiveness. Africa today accounts for definitely less than 4% of global value-added manufacturing. Yet we have the raw materials, the labor, and as we said, the latent energy. Just shifting Africa's share of global manufacturing and high value-added production, and I'm phrasing it in that clunky way to include things like the global load of data centers, which now account for something like 3% of global electricity use, will grow to between 5 and 10% as AI and other applications expand. Having those things really anchored on the continent makes sense for the planet, but is good for incoming investment and unlocks our young people's potential. I wouldn't stop there. It is inherently true that a shoe or a suit sewn with green energy in Africa carries with it less embodied carbon than one manufactured in a place that has a more fossil fuel reliant grid. So how do we begin to really drive green and climate competitiveness? That has implications for how we think about this first wave of regulations that are coming out to govern trade in global commodities, such as the carbon border adjustment. As currently written, it's almost certain to have adverse effects on many African economies. And yet, it could be written in a way that maximizes its climate benefit and actually generates jobs for the continent, because that's where it makes sense to do more and more of the world's productive activity.
Okay, so action.
Yeah.
What needs to happen?
We need to size these opportunities and understand them more clearly.
Why are we not doing that now?
We are starting to. At the Africa Climate Summit, you heard the analysis that said we need to stop thinking about the DRC's $10 billion worth of potential raw material exports into the battery stack, not even the $40 billion from processing, and talk about the $7.2 trillion of the global e-mobility market and how much of that can be captured over time. And the reason it matters, and I know we're talking about the financial architecture, the reason it matters to understand these opportunities is unless you're laying out a clear prize, you can't attract the upfront investment.
But the opportunities are not really breaking news though, James, are they? We know that these opportunities exist. They've always been there. The question is, why have they not been harnessed thus far? And how do you then take advantage of them? What specific things ought to be done, if you know what I mean?
I would challenge the idea that the opportunities have always been there. I think they have changed in nature. I think the addition of the climate effect of Africa's competitiveness actually changes the calculation, right? Until recently, we've just said, well, we've got lots of, we've relied on all of the other factors except for the climate imperative. And adding the climate imperative just adds that additional ingredient that we so urgently need.
Let's give James Mwangi a round of applause. Thank you very much for that. And ladies and gentlemen, we are now honored to be joined by the Honorable Ken Ofori, who is the Minister of Finance from Ghana. Thank you very much, sir, for joining us, gracing us with your presence. We are very keen to hear from you, so I'll go straight to you, knowing that you're pressed for time. Just set the stage for us. If I asked you a question like, how is Ghana, what would your answer be?
The place to be, I mean, you know. Independence, you know, AFCFTA, that's the future, and spiritual centeredness, I guess. No, but great, thank you very much. I'm really sorry. We have the G7 meeting soon, and I think I need to be there for it. Beautiful place you're having this. My next life, I'd like to be in an NGO. But great, very good question. I had a breakfast today, and the question really was from France to Nairobi to Unga, and here you are having a very clear picture of the problem, and I don't seem to understand what is the fulcrum to get action, and that's a problem. So Ghana, for example, we went to the fund after a rapid downgrade of the sovereign rating, which then resulted in a lack of access anywhere to be able to get. So in as much as we didn't want to, we could not go, as in the end, taking the community across the Jordan is more important than any philosophical stance at that point. So we did, and but prior to that, the president had asked the ministry to put together a post-COVID plan for economic growth. So we had that template and document when we went to the fund, which means that we were able to then construct the fund program on the basis of the chassis that we had built. That enabled us to move rather quickly to get a staff level agreement within 4 or 5 months. But during that period was an immense pressure of instability. The currency plummeted by 50%, inflation soared to 54%, growth was non-existent, and basically a lack of confidence, you know, in a democratic environment, and you allow that to play out. So we worked really hard to get the staff level agreement, we created, some confidence, but there's still a lot to go. Then one had to go to China, because then the OCC, the Paris Club, had to deal with this issue. And this is a common framework, and honestly, not too common, and the framework not sure. So how do you deal with that? And that I learned from Hanan. That wasn't too common. We did go to Paris and encourage China to become a co-chair. Surprisingly, or impressively, very good reception from the finance minister, assuring us that they look long term. This was a bump along the journey, and that they will support us. They came around, and in May we got a staff level agreement, and that then we got the board approval, and that led to the release of funds. But also, one of the issues was that usually the fund will give you money up to the extent of your quota, and somehow we're able to negotiate for 3 times the quota from the PRGT. So the importance of the GRPT should be clear to us, in terms of the surplus gap and filling it. I think the Canadians and Spain have come in to further support. It's a key intervention that is necessary, because at the end of the day, even the resources that the fund is able to give you, you still have a financing gap that you have to deal with. A financing gap in an environment in which you can access the market, and therefore you are going to have to deal with the domestic market. The bond, the debt.
Sorry, Honorable Minister, do you mind moving your microphone a bit closer to your mouth?
The debt profile also has 50% domestic, and then a small amount, really, relatively, with the Paris Club and other members, and then the Eurobond investors. But the Paris Club has this hold, and if they don't make a decision, the fund can't move. So that becomes something that we all should look at, the timeliness of it. So Zambia, 2 and change years, and it's not really about Zambia, but it's about the 20 or 30 million people that are in abeyance, for that period of time, just immense hardship and poverty. So creditors should also have some timelines in which decisions are made, and that should come as one of the things that we should talk about, the common framework. So we've got another staff level agreement last week, waiting for the OCC to come up with a memorandum of understanding. So far, correct noises are being made, and we are confident that that will come through, and then beginning the discussions also with our Eurobond investors. Proposals are in place, and we need to figure out a way. But over this period, I believe we've turned the corner. Some inflation is now 38 point something. It came down. It's been coming down consistently. So that's quite a bit of work over this period. The growth was expected to be 1.5. We're averaging 3.3 through half year. Expect that will be about 2.5 by the end of the year, which is good. The currency, January was still turbulent, but since then, maybe about 2.5% depreciation. So there's a sense of relief, but it's still, you still have the pernicious impact on employment and all of that we have to take care of. In all of the discussions of climate change and financial architecture, the question really is, we are all aware of the problem. We know something must be different from a chassis that is 60 or 70 years old, and who is going to flip that switch. And I think the frustration is all around us because clearly the structure as we have it is not going to be able to solve the problem. And I think, particularly in Africa, where we know that by 2050 will be a quarter of the world's population, about 1 billion people, it's not an issue of doing the right thing for Africa, because enlightened self-interest will show there's going to be massive global dislocation if we don't use this resource in a positive way. But we are where we are, and we need to really look really at the regulatory framework in which this financial system is built, because everybody responding loyally, legally to it is almost, in a sense, in my mind, like apartheid or civil rights. Until you break the mold, you think you are doing the right thing, because that is what you understand. And so what should we do about Basel II or III? What should we do about insurance? What should we do about all of that? And how to stop demonizing debt, because debt should be made to work for growth. And it can, but it cannot happen if I go to market and I get 8.9% for 3 billion facility. Greece might get 1.8%, and there's a gap of maybe $40–45 million a year, times 30 years, another billion, for me. So those are the realities, and there has to be something like a Keynesian intervention so that the real resources needed to make sure that growth and development can genuinely go on for a more productive future is what I will look at. Because I'm going through the program, and then I'll come out of the program, and the question is, do I have the wherewithal to get the appropriate capital, even during the program and after the program, to really trigger the jobs that we need for the youth. Yeah. And I liken it to the COVID period was a very difficult period. I had long COVID and had to stay months in the Mayo Clinic in Rochester, Minnesota, in which, the liver was shot. So it took 30 months through this August for that to happen, and it was total. So I asked myself if they are just giving me a part of the solution. What then happens when I get out of the Mayo Clinic and you feel that the current infrastructure is giving us half of the solution, and therefore is a cycle going to repeat? I'll come out with maybe a B rating this time, but that still leads me to 10 or 12% when I go to the market, which means invariably I'm going to be repeating the syndrome. So I think for us in this generation, the house is burning. We can't stop to argue, and who then is going to be the catalyst to really get solutions, structural solutions to this. Thank you very much indeed, and I'm really sorry I can't engage in the debate. That would okay here. Thanks.
Thank you very much, the Honorable Keno Foriata, Minister of Finance in Ghana. And very briefly, I know you need to leave soon, but you are involved with quite a number of groups in the V20 group of countries, African High-Level Working Group on Global Financial Architecture, and many other working groups working in this space. How do you think actions and advocacy from a lot of the people that are here today can be better coordinated to make sure that it's useful, it's working, it yields results? And who else needs to be co-opted, or who else needs to play a role?
Thank you. It's I guess
sorry, sir. Do you mind? The microphone is.
It's just I truly don't know. I mean, yes, I am in all of the groups, and we've had, great meetings in identifying what the problem is. I don't think we are recognizing our common humanity in all of this, because you know that everybody is wizened to the situation. And so what is it? Is it that, midterm elections in the US and then 4 years? That would be an excuse ad infinitum. Yeah. Will there be a war from Ukraine? Yeah, over the past, how many, since February 2022, I think about 288 billion US, Europe, ECOWAS, $29.6 million, but the Sahel is coming. And so you wonder, where is the leadership of the past, the FDRs or the Mandelas, that will really take, because it's a major change. It's not the tinkering, and that becomes so. I don't know whether. I mean, the multilaterals are also moving. Evolution. Kristalina has been incredible in terms of the resources she's been able to find for Africa. UN. Also saying the right things. So what? Multilateralism is in danger. Domestic politics. I don't know whether we can find the 4 or 5 people that the world will say, And I don't think we've also done very well with engaging with the private sector, because the resource allocations are so different from 1945, but they are also hemmed in by the regulations in which they work with. So yes, the V20, 68 countries, 1.7 billion people. I mean, potentially we now have agreed to be independent, hopefully with a headquarters in Ghana. President Akufo-Addo's term will finish. We are hoping Excellency Mia Motley will then come to head it, and whether that voice and that number of countries, pushing for something, will create a much stronger advocacy, and some resistance to that. So very good question as to where our common humanity is, so that we can truly confront this agenda.
So basically, this is going to be a generalization, but in many ways, Africa is on its own, right? Everybody else has other priorities, so to speak, and that's the reality of things. It's quite difficult to prioritize Africa's needs in a very complex world. Is this an appropriate inference from what you're saying?
I mean, sir, you can't be feel hopeless about it, because things change. I mean, when Gandhi started, it looked impossible, but there was a salt march and things happened. When Martin Luther King started, you had the great, wonderful Christian community writing to him that he's creating chaos. And so there's always who would emerge, where's the new Mandela? And so I don't, I feel it's just a very painful process, but we'll come to something. I don't know what will trigger it, but, nothing is hopeless. It's just the image of God is in everyone, so at some point something will click.
And finally, sir, as the captain of this ship that's called Ghana, where are you heading at the moment? What's your play? How have you decided to navigate?
Yeah.
I don't know if you're going to call them headwinds. I don't know what your definition of it is, but how do you plan to move Ghana forward from where you are at the moment?
You must not be African. You never call a finance minister, a captain of the ship. The president is. And so anyway, I mean, it really,
the president will say, go and ask the Minister of Finance.
Yeah, I'm supposed to take the demonstrations and all of that. I think really it's an odyssey. It's how do you get back to Troy, you know, and you're going to have, you know, the sirens and the whistlers and all of that. But we need to get through. You know, we did go through political emancipation early. We finally got the AFCFTA, which for me is the economic emancipation that is needed for us to, you know, focus on trade and investment and find solutions to it, understand how to value our raw materials in a way that has equity returns as opposed to those sales. And then just the spirit and the gut. I mean, at the beginning of the COVID, the expectation was what was happening in Ecuador, etc., and there'll be bodies littered all over the place. It did not happen, even though there was clear vaccine discrimination. So there's a certain resilience that I think we can count on and not feel hopeless about it. But we've gotten a seat at G20. Hopefully they'll change the name to G21. And then the designs of things that the North wants to do, at least you're at the table helping to design it, you know, for more efficacy. So I don't know, but I think if we keep working, if we keep getting the sense of empathy and coalition, we will make some headway. Yeah. So as Nkrumah said, don't look east, don't look west, just forward ever.
We've got to say thank you very much to the Honorable Ken Ofori-Atta, Minister of Finance of Ghana, for spending so much time with us.
Thank you.
I know you're pressed for time today.
Thank you very much.
And we appreciate that. You've managed to spare us some of it to answer these questions.
Yeah, I couldn't have gotten my entry visa back to Ghana from Mavis if I hadn't been.
But in one word, before you go, Minister, in one word, literally, have you been able to diagnose the problem? Do you know what the issue is that requires attention in order to get you to the next stage?
For the general problem, it's our common humanity. We have to find it.
Okay, fair enough.
Thank
I'll
you.
settle for that. I'll settle for that. Let's give him a round of applause. And thank you very much to the rest of our contributors for listening very patiently. Mr. James Wangi has had to leave us, and so has Dr. Hannah Mosi. I'd like to now move on to setting the AU up for G21 success. And Elizabeth, I really don't want to mess up your second name. Please, if you don't mind, what are your thoughts on this particular subject?
Just for the record, you got it right, actually.
I did. Oh, thank you. Thank you very much.
So that's a big plus. Good afternoon, everybody. I thought I would divide my sort of remarks into two sections. The first, really, to talk about the AU, and then specifically about think tanks. And as the Honourable Minister referred to Odyssey and Troy, let me pick up on another classic, Shakespeare's Julius Caesar, and say that there's a wonderful quote there that says, "There comes a tide in the affairs of men, which if taken at the flood, leads on to fortune." And I think the discussions today, the discussions over the last couple of days, and in fact, well, several months, I think on the issue of the reform of the global financial architecture and so on, I think point to a really rising African agency, African voice. And I think that's very important. And I think we mustn't forget that, because sometimes we do feel frustrated. We do feel like things are not moving, but I believe things are moving. And the opportunity presented by Africa, the AU joining the G21, is exactly that. And I think the big struggle starts now, or the the critical issues begin now. I think when we this is an opportunity that the AU really must grab with both hands. I think there are already a number of processes within the AU and the African continent as a whole that create a good foundation for that at the official level, at the formal level. But just to highlight, I think 3 key things that at the formal level we need to think about in the G21. I think the one is structure, the second one is resources, and the third is content. In terms of the structure and the resources, I think we need technical expertise and political heft at the AU level. The G20 process and I think the people around the table are very familiar with it, is every year it's intensive. It's highly technical, but it's also highly political. And we need to have both of those at the AU. And so really at the AU Commission, in terms of the decision that was taken at the AU summit earlier this year, that the representative will be the chair, the rotating chair of the AU, with the Commission providing support, we need to really unpack that a little bit and see how does that play out in practice. Clearly at the head of state level, in terms of the summit, that's the rotating chair supported by the AUC. We saw them this year in Delhi as well. At the lower levels, in terms of the finance track and the Sherpa track, who is that? How do we provide, how do we build up the capacity within the AU Commission and other African institutions, again going back to what the Egyptian finance minister was talking about, to ensure that the backup is there. And here we can draw on UNECA, we can draw on the African Development Bank, we can draw on AUDA, NEPAD, but you know, to some extent, all of these institutions also have constraints. But these are critical in terms of the formal African institutions dimension. And then the importance of coordinating. We have another African seat since inception at the G20, which is South Africa. South Africa will be chairing, taking over the presidency at the end of next year. We are, from the 1st of December, going to become part of the G20 Troika, G21 Troika. I must get used to that, and hopefully they'll rebrand it. I think this is an opportunity, in fact, right from the get-go now in December, when Brazil takes over. This is an opportunity for the AU to put onto the G20 agenda issues that are important for it. And some of my colleagues around the table now will refer to some of those, but clearly the discussions we've had today are critical. There are some low-hanging fruits we need to think about, and there are some fruits that may not be low-hanging, but that we need to engage on now. We talk about the big elephant in the room, which is the restructuring of the global financial architecture. It's not going to take place overnight, but we need to keep pushing for it. And here I think there is a unique opportunity for policy think tanks, for academic organizations, consultancies doing work in this field on the continent. Sometimes it is politically difficult for member states to say things or to call people out, to call countries out. It is less politically difficult for us. And I think we need to, as we move forward as the AU into the G21, we need to recognize those various touch points and the different perspectives or the different responsibilities and roles that different actors can play. Think tanks, governments, African institutions, and so on. Let me make 2 points, because I think, Alan, you're going to tell me to shut up very soon, right? A couple of points on what I think we as think tanks need to engage on. I think we have 2 types of engagements that are important. The first is to really provide support and analysis, very much like we heard this morning, on issues that are already on the table that Africa wants to put on the table. The second one, of course, is also to provide support in terms of some of the over-the-horizon issues that may not be on the table, but that are important, that maybe their time is not yet, but these are critical for Africa. And these are issues that we're also debating at a more formal Think 20 level about the role of think tanks in these platforms. I think let me make a couple of concrete suggestions then, based on some of the work that ACET, SIRE, and others have been doing over the last few years. It's important to really build a solid network of African research organizations. Some of those foundations are already there. They're there in ACET's initiatives over the last couple of years. At my institute, we've also built up a research network that at the time was aimed at bringing some African think tanks into the G20 debate, because they weren't there initially because they weren't part of the G20. And I think if we compare the capacity and the thinking on many of these global economic governance issues in African think tanks today with what it was 12 years ago, there's a significant shift. And I think that's the opportunity that we have. Let's build then on these networks. In the case of SIRE, we've been working with a small group of institutions, which included Prof. Ndungu when he was at the AERC, on a think tank, on a Think Africa, Think 20 Africa standing group. We have, for example, this year commissioned from that group a number of concrete research outcomes, which papers which will come out before the end of the year, which cover a number of look at the outcomes of the last two G20 presidencies, which were developing country presidencies, and ask them to do research, to analyze them, and to come out with an assessment of how that tallies with African priorities and the African agenda. And just four of the topics that I can think of off the top of my head were the energy transition and sustainable finance. It was tax, financial inclusion. It was infrastructure. And it was also an issue of industrialization and green industrialization. Concrete issues that form a background to how we then at the G21 can take these forward. But I think it is important also from a think tank perspective, a research perspective, to build resources for us to be able to do more work in that. And that obviously is always the challenge for institutions on the continent. But I think there's a really solid foundation there. It's about building on the policy interaction between policymakers and African research organizations, which we must, I think also it's incumbent upon our governments and policymakers to really take advantage of the domestic, local capacities that have really been built up over time. And I'll stop there.
All right, thank you very much, Elizabeth. I let her get away with that, but she's the one who will speak longest this afternoon. You make very, very interesting points, and we shall come back to you a bit more later. At this point, I'd like to introduce Hannah Ryder. Again, Hannah has a specific interest in helping increase Africa's voice at the World Bank and IMF. She's the CEO of Development Reimagined. Hannah.
Thank you very much, Alan, and thank you very much to ACET and others and PCN for the opportunity to be here and to discuss these issues. The way that voice in the World Bank and IMF is often thought about is often in terms of a tussle between G7 and emerging markets, and certainly with regards to quota reform, that has been the case. And it is quota and shareholding which leads to the outcome that we had earlier, where you talked about the executive director being executive director for 23 African countries, whereas others get to speak on their own. So there is a question about what African interests really are, and I think in addition to what the Ghanaian finance minister was saying what Kenneth Oriato was talking about of our common humanity. I think the task for African think tanks, consultancies, and research organizations is to think about what are African interests without, number one, without taking into account anybody else, I'm sorry, and then trying to bring them in, okay? And that's partly because that's how history has worked, right? So we have the current inequity with quotas, and I'm going to use the IMF as an example because it's the easiest one, but you could do the similar analysis for the bank. Hanan talks about this. Germany has got 83 million people. We have on the African continent 1.4, but Germany has about the same size of quota as the African continent at the IMF. Germany also has plenty of finance to deal with its own development and to do plenty of quantitative easing to deal with a lot of things. So, you know, that's the obvious one. Historically, the quotas were determined at a time, you know, we always talk about the creation of the Bretton Woods Institutions at a time of, you know, coming out of the World War. Yeah, absolutely. But there were also a time when the UK and France between them had over 35 colonies. And they relied on those colonies to argue for those extra shares. They did. And the countries that were at the founding, India, South Africa, Egypt, Ethiopia, who were founding members of these institutions, now have less shares than they did at that point. So there is, if you don't think about this from an African interest point of view, that's the outcome you get. It's also the outcome that you get with special drawing rights. Would we be talking about 100 billion special drawing rights of reallocation, you know, several years after 650 billion reallocation, if there was a bigger quota for Africa? Africa got 33 billion in the first place. That's because of our quota share. So if you had a bigger quota for the African continent, we wouldn't really even be having the conversation. I mean, I'm sure Hassatu would still be talking about how do we have more reallocation into the African Development Bank, and definitely back that 100%. But it may not be the kind of issue that it was and that it still is. And it's also worth noting with the current proposals on the table from, you know, an extra seat around the IMF table for Africa, of course, very welcome. That would reduce it to 15, not 23. Great, excellent, good start. But also the idea of a capital increase. We just did some back of the envelope numbers on this. If you double the capital of the IMF, which I'm not sure that's a realistic thing to argue for, but let's say you did, the African continent, again, because of the way that the quota shares work, would get an extra 12 billion of quota shares. If you flip that and you say, well, what would happen? Oh, and by the way, the G20, the original G20, would get 160 billion special drawing rights if you did, quota shares if you did double the share of the IMF, the capital of the IMF. If you flip that and you thought, well, okay, what if you doubled the share, the quotas for the African continent instead? What would that lead to? And you kept everybody else kind of constant. You didn't play around with a formula necessarily, but you just doubled the share for Africa. You would get an extra 49 billion quotas to the continent. These are just back of the envelope numbers. We can double check them. But this is what I mean. It's quite a different kind of conversation and potential outcome if you think about these things from an African interest point of view. And I think that is what, giving this just one example of a particular policy issue, just one example of if you think in that way, this is what the task is, to build on what the ministers have said, to build on what others have said. This is what the task is for now on all these different issues, to look at, we've got this architecture, but what is an African interest behind this architecture, and how can it deliver better? Even just the existing stuff.
Oh, she deserves a loud round of applause, does she not? You've given us a lot to chew on, and thank you very much for that. I'm going to come to Hassatu in a moment, but first of all, Dauda Sembene, apologies, I didn't introduce you earlier on, but I'm really keen to hear from you. Dauda Sembene is the CEO of Africatalyst, and I wonder what your thoughts are on making SDR reallocation a reality. And sorry, I'm going to have to be a little stricter with you as far as time is concerned.
Well, thank you very much. I think I won't be very long. First of all, I think when we have Hassatu on the room, I think it's much more appropriate to hear from her how the SDR rechanneling agenda is moving on. But I'll be making some brief remark on this issue. So I think the question that you asked me is to talk about how to make SDR reallocation a reality. I will say, of course, that it's already a reality, but unfortunately, it has not really reached its potential yet. It's a reality because, of course, as you might have heard from the IMF Managing Director, she is estimating that about 100 billion has been already recycled through the PRGT and the RST. Those are two windows at the IMF, one for concessional lending and the other one for climate finance. Of course, we can talk about it, whether she's talking about pledges or commitment or reality. But even if that's the case, the question is, if you recycle all SDR through the IMF, you miss some opportunities. What type of opportunities? You're missing actually opportunities that MDBs can give you, not only in terms of helping African countries and developing countries in general, making progress toward their development agenda, making progress toward infrastructure investment, making progress towards actually addressing food security issues, making progress toward climate finance, or fragility, all of those global public goods that we are talking about. Unfortunately, it's not clear that the IMF can help you do that. Of course, they would give you budget support and the government can use that money to their will. But what the MDBs give you, the IMF doesn't. It's actually the possibility, first of all, to leverage the resources they get. I think I hear very often Hassatu saying that in their case, they can do it 4 times, which is actually used. So you give them 5 billion, they give you 20 billion of lending. That benefits, let's say, SMEs. That's not something that the IMF can do. So anyway, it's just to say that this is a potential that we still don't have and that we need to push for the IMF for recycling to go beyond the IMF. Of course, we heard all of those issues. If there is something that we certainly need to do for that to become a reality is, first of all, align with what the AFDB is already doing. They have already put on the table that very effective proposal for using SDR as hybrid capital, and certainly a proposal that really meets the requirement for reserve asset as status. And I think that was clear from the informal discussion that the board had already had, the IMF executive board has. And as Hassatu said, it's very much urgent to push the IMF to make an official position on this so that countries that are saying they're only waiting for that to really make their decision won't have any more, reason or excuses. I don't want to say excuses because I want to be always diplomatic. Anyway, I think that's certainly something that is critical, first of all. A second thing that is critical is also to support AFDB in their efforts to secure at least those 5 contributors. I think the best way to do so is to really align and support AFDB in their sort of work. Some of the partners here, including, of course, the Rockefeller Foundation, Gates Foundation, all of them have been also supporting that fund. So it's important that really we coordinate our effort. But I think what I would really say to finish, because I don't have too much time, is to really echo what the minister says. It is also up to African institutions, African leaders, to make sure that they really do their part, because as they said, there is a part of the issue which is political. And political problems require political solutions. So how do we do that? Is to make sure that, first of all, we feed them as an organization. We feed those political leaders, including the ministers of finance, with the information they need, and they need to comprehend to make sure that they are at, they understand fully the problem, and they can actually
bring that political aspect of the solution that AFDB cannot bring to the table so that we can quickly secure those contributors. My sense is what we are talking about here is a very much, it's a drop in the ocean. I think if I'm not mistaken, I think we're talking about 2.5 billion in the case of AFDB to be raised. But the question why it is important, it is that would set a precedent that we can use for the future, because there is so impressive potential of using the SDR system to mobilize resources for development and climate finance purposes. And that you cannot do it so long as you don't have a clear way to show that this can be done without necessarily actually taking away the reserve asset characteristic. I think that's important. And of course, I think that's something that we need to do as soon as possible. So I see you looking at me, so I'm going to stop here. Thank you very much.
I was trying to keep it soft, the look soft, but thank you. Thank you very much, Daouda Semben. Very, very strong submission there. And right now, Hassatu Diop Msele, Vice President for Finance and Chief Financial Officer, African Development Bank. What do you think about this entire conversation, especially around SDRs? You're being recognized, certainly by Daouda, as the authority on this issue in this room.
Thank you very much. And actually, I should say that I had not realized that the press was here, else I would have been much more filtered in my comments. So what do we need? We need the political drive. The French President Macron, has been the first to talk about. Has been championing.
Sorry, do you mind adjusting your microphone? Yeah, sorry. I couldn't say that too many times to the minister, but I can take a bit of a risk with you.
Okay. Is this better? Yeah. Okay, so the French President Macron, has been championing a reallocation of SDRs to MDBs, and we need other presidents, heads of states from the global north, to be vocal. The African Union made a communiqué. And but that message need to be carried, and the voice of African leaders needs to resound even louder. And I would like to also thank all the CSOs that are around these tables, because they have been extremely supportive. It was really my first interaction with them, and I never thought that we would get this level of support. And I should say that many times, we would have wanted to just pause and go into other things. But, thank that you are the reason, why you made us, we decided to keep going because of the support that we are getting from you. So thank you very, very much for helping us get that resolved. CGD, Rockefeller, the One Campaign, Afritelis Gates Foundation, OSF, Development Reimagine, UNICA, all of you. The making SDR reality. European countries have been saying the ECB, the European Treaty, is a constraint. We cannot do it. We have presented a proposal of 2 or 3 months ago that no longer makes this constraint a constraint. So what we are just asking is a guarantee in euros, in dollars, in GBP, in Swiss franc, to help us make this rechanneling a reality. The SDR reallocation is not a grant, it is a loan, and we will pay an interest rate for this loan. It has a leveraging impact, and it's not a substitute for the PRGT and the RST. It's complementary to the action of the SDR. What we have and what is unique to us is our leveraging capacity, 3 to 4. We, MDBs, are part of the global financial architecture. Why aren't you using us? No, we have a simple solution, impactful solution. Use us.
Sorry, who is that point addressed to? Use us.
The countries.
Who's us?
The countries.
Yeah,
use us, the multilateral development banks.
Yeah, but
use our leveraging capacity. We
right,
can
who
leverage.
Who needs to use you?
The shareholders. I mean, the SDR country, the SDR-rich countries. Let me put it this way. The call is for SDR-rich countries, developed countries, to reallocate a portion a small portion of the SDRs to multilateral development banks. Right?
And Hassatu, please, I'm really glad that you're here because it gives me an opportunity to ask you a question I've been wondering about. The FDB is primed, it's been ready for a while, and it's been pushing for this, probably primed, actually I'd say primed better than everybody else on the continent. Is there a role for the private sector banks to play in this?
Absolutely. So, because basically from the onset, when we started discussing this, we said an SDR reallocation to the African Development Bank, which we are going to use, yes, for our core operational priorities, infrastructure development, energy, industrialization, etc., but also with a portion allocated to African public financial institutions. And how we're going to do that is by increasing our equity investments and also in doing some parallel financing, providing lines of credit and so forth. But the public financial institutions are part of the SDR reallocation from our own perspective. So we will look at the financial institutions, those that need additional equity. There are some that would need, let's say, much more technical assistance. So that's how we're planning to deploy these resources. So we do have a plan for this. We just need to get the resources.
Right. And the African Development Bank is open to collaborate with, say, Afri-Exim Bank, for example.
All the African financial institutions in Africa, in the best way possible, via equity, via lines of credit, via tier 2, and via technical assistance, because there are some public financial institutions that will not be in a position to take some of these resources, yes. And we've said it publicly.
Yeah, thank you very much. And any other thoughts before I move away from you? Any final thoughts? Briefly.
Thank you very much for the support, and let's continue. And we will continue on the, with the IMF, with the countries. We'll continue the very valuable work that we're doing with the CSOs, and also, the message. You were talking about, the messaging to African ministers. It's something that we've done. We've provided briefings as well. So, but let's carry that voice louder. Thank you.
Let's give Hassatu a round of applause, ladies and gentlemen. Let's talk about, finally, before we open to the floor, and I'd really like for a robust conversation to happen when that happens. Please feel free to just speak to each other if you wish. My role will just be to open the conversation. I just want to hear briefly, if I may, from Ms. Kaplana Kwachar, who is the Director, Development Policy and Finance from the Bill and Melinda Gates Foundation. And I want to hear about increasing concessional finance. What are your thoughts?
Thanks, Alan. Thanks, everybody else. So quickly, I don't have to define concessional finance for this room, but it's basically finance below market rates provided by major financial institutions such as development banks and multilateral funds to accelerate development and promote economic welfare. The results of the concessional finance flows that have taken place in the world so far over the last, maybe 6 decades have been nothing short of remarkable. So, and MDBs are the largest providers of net transfers of concessional money to low-income countries. They've provided, $30 billion in net flows in 2020. Today, I want to focus on IDA, which is in large part because it's the upcoming replenishment cycle, but also what much of what I say will apply to other concessional financing more broadly. So IDA, the World Bank's concessional financing window, established in 1960, is the largest provider of financing to the world's poorest countries. It represents about 1/3 of total development assistance. In 2022, IDA committed a historical record of $38 billion, 1/3 of it in grants, and the rest of it is concessional loans. These loans, the IDA flows are counter-cyclical. They rise when everybody else stops lending. And IDA delivers a lot of its financing, as I said, through grants. So even though we're calling it concessional lending, a lot of IDA's money actually goes through outright grants. But even the loans are highly concessional. Interest rates are very low, 0.8%. Maturity is very long, ranging from 38 to 50.
And so it translates to a grant equivalent of like 50% of the face value of the loan. And one more thing, IDA's financial model has evolved. You heard Ed talk about it. Its corpus now is made up of donor contributions, debt service on loans that were previously made, but also market borrowing since 2018. And this makes it quite a unique mechanism for raising these funds. I won't go into the situation facing LICs. You've heard that from everybody. So in the interest of time, let me just go directly to talking about a few things about IDA. So we already heard that the sovereign debt restructuring process that we have now is frankly dysfunctional. It's unwieldy, it's time-consuming, it acts as a deterrent to countries. Hanan said that. Countries are choosing, therefore, to muddle through, deepening the economic scars on their countries, further setting back growth prospects, and at a huge human cost. The minister from Ghana made that point very poignantly. Here I want to focus on how this debt crisis is costly to IDA. In a recent excellent paper by one of our partners, FDL, thank you, Martin, two other factors are affecting IDA. As countries fall into high risk of debt distress, IDA has to switch more of its financing from loans to grants. That is a rule change that took place in 2009 to prevent a scenario where IDA would actually contribute to debt distress. Very sensible move, but it does have consequences on the finances of IDA. The more grants they make, the less they have available to invest. And then the second thing is that IDA, is because IDA is a counter-cyclical lender, much of its support now to highly indebted countries is leaking out in the form of debt service to other creditors. So, which is fine. Part of this is, it is IDA's role to be this counter-cyclical lender, but when it's, most of it is going to repay creditors, it means much less is available for actual development spending. So, and so this is making IDA even more dependent on donor contributions. You've heard from others before, the donor contributions hit a peak in 2012 of 26 billion. They're now standing at 23.5, which is a substantial decline in real terms. And the falls are actually very large. For G7 countries, it's a 25% decline. For G20 countries, it's a 10% decline. For all OECD, it's a 20%. So big declines in IDA donor contributions. And the other little fact which came out of this G20 IEG report yesterday was they called for a tripling of IDA contributions, donor contributions by 2030, which they calculate is an equivalent to 0.04 of GDP of the donor countries every year, 0.04, just to repeat that. So I think for this room, we're all ready and to do what we need to do to kick off a solid IDA 21 replenishment, not a business as usual replenishment. But we want to put our heads together here. We're a bunch of intelligent people, I think, and we need to work on how do we make this a much stronger replenishment. Let me just end. Give me one more minute. I do want to end with what Africa needs to do for itself. Africa needs to really focus on raising domestic revenues. I know that this is not the best time when the economy is against the ropes, but the foundation has to be laid for raising domestic public revenues. Better public financial management, both the ministers, finance ministers over here talked about that. Concerted efforts to raise domestic private resources, developing capital markets, we heard that as well. And above all, really improving governance and transparency. Karim, you talked about that today, yesterday. These are the most robust ways to attract investment. Defang credit rating agencies, if that's what you want to do, and sustainably finance the huge investment needs, right? These are measures that don't actually cost any money. And so let me stop there.
Thank you. Thank you very much. And that was a very, very informative submission. Thank you. I am now opening the discussion to the floor. Anybody who wants to say anything? Yes, sir. We're going to keep it brief, and I'll move you on in the interest of time so that we can accommodate everybody. I have anybody else? Just to get a sense. Okay, I'll start with you, sir. Please introduce yourself. And
sure. Thank you very much. And my name is Hakim Ben Hamoud. I'm the former Minister of Economy and Finance of Tunisia. And I'm leading now a think tank called Global Institute for Transition. And we joined recently the coalition of think tanks coordinated by ACET and the Policy Center. Look, it was really, I would like to congratulate ACET and the Policy Center for this session. I think it was an excellent and very informative session. On the proposal, in fact, I would like, you asked about how to go from here. And, you know, the atmosphere and the discussion today reminds me of the 1 or 2 years discussions before the adoption of the HIPIC initiative by the G7. And we were in the same atmosphere. At that time, there were a consensus on the need to cancel the debt of the LDCs, but we didn't know how to move about it and how to implement it. And this is the same, I think, situation we are finding ourselves in today. There is a consensus on the need to have the channeling, as Asatu said. At the same time, the conversations were quite difficult, especially when they are open. Of course, I would like to, agree with my colleagues from South Africa on the need for this coalition of think tanks to continue our technical work. But let me put another proposal on the table. At that time, my boss at the UNECA, Kiwaya Mwaku, came with a great idea. What he called the big table. And the big table was bringing 5, 6 ministers from the country of finance and cooperation, from the countries who were willing to channel, you know, the SDRs, and 5 or 6 ministers from African countries. And they were an informal, on a Chatham House discussion, conversation. I think this dialogue helped a lot in really opening the space and building to reach, in fact, the consensus on the need to cancel the debt. So one of the ideas could be really for the think tanks, for ACET and Policy Center, and this alliance with African institutions like the ADB, the ECA, is really to think about having this conversation in a very, what should we do as African to help these channeling countries, in fact, to go ahead and to start, in fact, implementing the things. And from our side, what they're expecting us to do, really to start this process. So it's an idea, building confidence, building consensus, and really looking for what kind of issue we should do. So it's an appeal for ACET and the Policy Center to really think about this idea and to probably ask KY, have his advice on the way in which he implemented this idea in the past. Thank you very much.
Thank you very much. Anybody else? Any more thoughts? Yes, sir. Sorry? Okay. Sebastian and then Lily. Sebastian.
Thank you very much. I'm really grateful. I'm Sébastien Treyer, the head of the Institute for Sustainable Development and International Relations in Paris. So being a Europe-based think tank, I'm extremely grateful that I was associated to this morning. I just want to say that precisely in the type of format that Minister Ben Hamouda was talking about, it would be extremely, we as European think tanks on the same issues are committed to try and help you have that conversations with these ministers from our countries. And I was just talking to Eric Pelowski that it would be also very useful that we can use the French example on SDR, the solution found for France on SDR relocation for convincing other European countries. So my first message is just count on us to try and be helpful when necessary. You are, as policy analysts, think tanks in Africa, don't always need us, but if needed, we're here to support. The second message that I want to say is that I'm working with a network of sustainability and energy transition think tanks in Africa and in Europe. And the colleagues who are the specialists of energy transition investment plans, I think they really also need to get connected to this network of economic transformation think tanks, because there is a lot that we need to discuss about how the energy transition plans are central to economic transformation, but also are facing issues about the cost of capital. And we could bring that conversation forward also. So here again, I'm not talking for myself, but for my colleagues like Professor Chukwumereje Okereke from Nigeria, who could be really associated to this network, and I'll make sure that you get connected. Thank you very much.
Sebastian, I'm interested in finding out why France has chosen to be more open to it. What lessons can we pick up from that?
Sorry, I think there is a technical lesson. I'm not sure this is what you're asking me, but there is the idea that France was able to find a solution to go in the direction that Director Hafsatou was talking about. And that's something that I can't tell exactly, but that's what I'm eager to discuss with the other European ministers to say, hey, there is a technical solution. Then on the political side, I think there are advisors to President Macron that are really saying that if we don't show the sense of common humanity that the minister from Ghana was talking about, we are going to be in a mess as Europe. So there is a moral argument that is becoming a strategic argument. This is the only thing that I believe. I don't know if my president is going to keep going on that. I hope he will. But I know that France is not the best champion. So let's find other champions.
And one last thing, and this might be a rudimentary question, but I'm curious, from what you've just said, should we be talking to advisors first? Should that be a starting point? Where does the advocacy actually happen in order to see some progress?
I think I would need to think better about that, because this is a very strategic conversation about who we address. Let me just say that, and please consider that Chatham House. I know this is online, so okay, it's not Chatham House. No, I believe it's one complicated thing that I think we need to struggle with, and let me talk about generic issues and not my own country. Advisors in charge of development are weak advisors in the diplomatic cells of a president's office. And so we need to raise the attention that this is a financial stability issue and a security issue and a geopolitical issue. And that would be my first answer to your question. So talking to the advisor in charge of development is often not the best entry point.
So thank you very much for that. Lily, you had something to say. Please introduce yourself for the sake of everybody.
Thank you so much. Lily Hahn. I'm a director of Innovate Finance with the Rockefeller Foundation. And I believe the task before us for this particular section of the convening was on the implementation steps and action plan, right? And this reminded me of a gathering that we had of a very similar group of people now almost 2 years ago, where ourselves, the Gates Foundation, Open Society Foundations, the Children's Investment Fund, brought together a group of leading think tanks and policy experts. Actually, I think, Mavis, you were in that conversation. Daouda, I recall you and CGD were there. ODI were there. And, you know, we thought, okay, great. These are the leading development finance thinkers. The conversation will probably largely be kind of a laundry list of policy solutions, similar to some of the things we've talked through today. Of course, a different one 2 years ago, but that type of discussion. And instead, what we were somewhat surprised to find is the conclusion of that conversation. You know, you gather this group of people who are focused on policy analysis and technical solutions, and every single one of them basically said the bottom line is it's not about the technical solutions. We know what the technical solutions are. We've been working on them for decades. It's about the political will. That's truly the missing gap here. And we still have a lot to do on political will 2 years on, for sure. But at the same time, we really took that message to heart as a group of philanthropies who have the resources to fund some of this work and make those linkages between the technical and the political. And so that's what we are trying to do now. And it hasn't been perfect because it's in some ways an immature market in terms of well-coordinated advocacy that now is also able to link development finance with emerging climate finance and other global public goods financing, right? That these are complicated challenges before us that, quite frankly, I don't think the advocacy infrastructure is fully there to do this effectively. But we're working on that. We're experimenting with lots of different models, you know, from building networks of advocacy organizations between the global north and the global south who can, you know, work on different geographies, on different topics, to directly, with our own principles, engaging with senior policymakers and shareholders who have the ability to move on these issues and adopt these technical solutions. So I would just urge this group, again, of policy experts around the table whose day-to-day job job is the analysis, the technical solutions, and making sure that we always have the best of that at the forefront, to also be sure to embed in that solution development a very clear advocacy strategy if you're taking it forward, and know that there is a whole ecosystem out there, right? Not a perfect one, but one I hope that is growing and maturing, that is trying to take this package of solutions into action and into sort of political will. Thank you.
Yeah, and I'm glad you said political will last, because I'm going to, it might seem obvious to people in this room what political will is and what it looks like, and I'm not going to assume that. I'm just going to ask, what do we mean when we say political will? And does that cover everybody? Does that cover everything, or is it segmented, if you know what I mean?
That's a tricky question, because I think partly because the topics are so fragmented, right? And I think some of what we're suffering from right now is that there is such a proliferation of great technical solutions. And how do you prioritize among that in terms of who are the right decision makers to approach with what specific kinds of acts, who are the right champions or groups of champions to put together on each of those, right? And ultimately, what we want to take forward, what we want to move forward is a package of those solutions, which a group of political champions are pushing into implementation.
And I wonder, Lily, though, briefly, before I come to this gentleman here, if you think that part of the challenge might be that these technical solutions are not necessarily politically relevant. Are they in sync? Am I? No?
Yeah, that is a very clear challenge. Yeah, and I think things are moving in the wrong direction in many ways, which is what makes this even more imperative that we do our best to deliver a coordinated set of priorities that targets meaningfully where it is most politically relevant. What has the most traction, and that we're extremely strategic about that, because the reality is there's diminishing appetite to focus on international cooperation, multilateralism, development and climate finance, poverty alleviation, all of these things which actually for decades there has been, somewhat consistent support for. It's actually moving very much in the wrong direction.
Thank you very much. And Dr. El, now I'll come to you now before I go to the gentleman over there. You said no, and I heard you, so I want to hear what you think.
No, it's almost, this is what we teach to students. It's a managerial question. It's, there are forces in movement, and there are at some point a convergence of forces. It's almost physics. Your question about political will, it's almost physics. It's many reasons that you don't control, but there's a moment where things, polarized at some point, and then you can make a push. And so what you're saying is that you need all this energy, this is a bit fragmented, needs to at some point be sufficiently high. It's, increase the pressure for things to happen, and they need also to be aligned with a political agenda of a specific heads of state or a couple of heads of states, or pressure coming from the state. So it's a very complex, the only thing we can do here is to try things. It's a trial and error process up to a point, and it was described by Hakim. The HIPIC sort of dynamic was the same. So what I said earlier on is that we can draw from this meeting that something is happening, and that was what Joe Stiglitz said yesterday. There's a departure for an equilibria, from an equilibria to something that we don't know what's going to happen. So it can be a bit abstract, but I think as think tanks we should look at that. We should do the technical work, but we should be a bit more political and to see where are the stars, are they aligned, what we can do. Can we push here, you push there, create a sort of dynamic, intervene. So there is the what, but there is the how we do that, and we should spend time influencing the decision process, building alliances. I mean, there's a whole, and we're not well equipped to do that. So like us, we're we do public policies, we do the technical work, but some others could be more talented than us to do this kind of work. But it needs to be done. Otherwise, you don't have sufficient energy in the system to provoke the change.
Thank you very much for that. Sir, your name and, sorry, just introduce yourself, if you will, and your point.
Thank you. My name is Yungong Theophilus Jong from Africa Forum, a network on data and development, AfroDat. Yes, I think I've followed the discussion's quite enlightening, but just maybe also one of the comments is like probably we have taken a reductionist approach. For instance, I've heard a lot about the SDRs. The allocation and the reallocation was done, and it was done, right? But I think one other thing which I think as part of Africa on the global financial architecture for us to focus attention is to address the political fragmentation in Africa. I think it is very important when you come home, you actually find that we approach the international financial architecture in the divided ranks. We have an African Union agenda blueprint that we actually have not actually managed to summon what Lily calls the political will to be able to approach this architecture, in a coordinated way. Because when you look at it, it's true. The markets are more coordinated. The creditors are more coordinated, but we, the borrowers, we approach everything in divided ranks, right? You can't expect Zambia to go talk to China. These are two, they live in two different universes when it comes to the political and economic power. But then if they're able to address this within Africa and putting up a united front, I think it makes more sense. And it gives them more leverage and more voice and power, to be able to deal with the architecture. And I think these are some of the issues that we also need to pay attention to. And then the issues around, we heard of G21, which is a good initiative, but I think there are also other spaces, for instance, the financing for development space through the UN, where there is equal partnership, between countries, which I think we are also not addressing, in our discussions here. And then there are issues around illicit financial flows. We have heard a lot about this, and I think it also requires a lot of attention. Because when we talk of climate finance today, we're only looking at what the markets can offer us. We're not also looking at what we are losing through illicit financial flows, starting from the high-level panel report right up to an UNTAD report that put the figures of close to 90 billion, US dollars that leaves African countries through illicit means. And these are just conservative figures, right? And we know where these illicit financial flows are going through. And we need to work on that as well, so that it is not just about market solutions. It's about systemic solutions, actually. Because if we get stuck, right, within that narrow path of SDRs, it will be very difficult for us to get the results. We need approaches that actually address the structural issues. And just one last quick one.
Keep it short so we can...
Yes, and we do a lot of policy work, but I think I now also highlighted something which was highlighted earlier in terms of think tanking and even the academic community. They play a very important role because they recast and they reframe some of these debates that actually challenges the foundation of the system that we're actually fighting today to change. Like, how did the Britain and France end up with their SDRs? These are questions that we haven't actually addressed, and I think think tanking and the academic community has a potential here, and we need to also involve them, in this move, to reform the global financial architecture. Thank you.
Thank you very much. We have about 7 minutes and 43 seconds to finish up. I'm going to give the opportunity. I'm going to give you guys a minute and a half each. Starting with you, ma'am. Could you just introduce yourself, please, and make a very, very brief comment?
Okay. Hi, everyone. Thank you. I'm Kate Donald from Oxfam International.
I head up the office that leads engagement with the World Bank and the IMF, but we also have obviously many colleagues on the African continent who couldn't be here today. I wanted to kind of make a point about breaking down silos with kind of two examples. I mean, first, there's been a lot of very good points about the political will and the need, how do we translate this technical expertise into the political will? So I'd really like to make a pitch for kind of think tanks and academics and kind of advocacy and campaigning organizations like mine to work better together. I find that sometimes the kind of the fault lines and why we don't necessarily always work, and I say this as someone who has worked both at think tanks and at campaigning organizations, is because we can't kind of quite agree on the ambition of the pitch that we're making, and we can't quite agree on all the technical details. And I'd like to make the case that, I don't think that matters, and we should try not to get too bogged down in the details and just understand that we're all working towards the same goal. Some of us might be putting forward more ambitious, more radical asks, but that helps to shift the Overton window. So that's my kind of silo number one. And in terms of the silo number two that I'd like to raise is the kind of some of the silos between these financial issues like debt and tax, for example. And I think one, my colleague from Afrodad there was talking about the need for better coordination among African countries. And I think one really good example to look towards is the leadership that's come from Africa in the move towards the UN Tax Convention. And I think that's a good model to look at. Thank you.
Thank you very much for that. Very briefly, you, sir.
Yeah, thank you very much.
If you don't mind introducing it.
Yeah, Ziad Ladel, I'm a senior advisor working with an international law firm based in Paris and with a focus on Africa. And actually, I would like to thank you, all of you, for this very, very interesting conversation you had today. And what I noticed is that we have made a lot of focus about the finance aspect, the financial aspect, the funding of development, but not as much about the operational and delivery model of the MDBs and about the states, the beneficiary states themselves. And I think I used to be Minister of International Cooperation in my country, in Tunisia, for almost 3 years, and I think Hakim will share exactly the same view about that, is that we suffered a lot from the delivery and the way of the decision-making processes in the international institutions, the way they are implementing also their project, and a lot of procedure, very complexity, the huge complexity of work about of the MDBs, and at the same time about the lack of capacity and the weak capacity of the ministries and the government agencies who are also benefiting from this finance. And I think that this is an important aspect to focus on, and I think now we have, with this independent expert report, a lot of suggestions. Now the idea is how to reduce bureaucracy and how to work to reduce bureaucracy on both sides, so as we can have a better use of the finance that we are talking about and needing to looking to amplify the scale of it. The second point, very, very quickly, is I think that we need this coalition working about mobilizing the political leadership to be also on both sides. So I'm really encouraging also the think tanks and the coordination working on the African side to work with their counterparts in Europe and the United States and the Western countries, because we need to reach also the public opinion in the European and American countries, and to reach also the decision makers there to make them more aware about the importance of this work to mobilize SDRs and other innovative tools to have more funding for international development. Thank you very much.
I've got to say thank you very much to you, sir, and you make the point that has been on my head throughout this afternoon's session, And that point is, with all the technical stuff that has been done, with all the need to move on to the next level requires what I do, which is storytelling. You can come up with the best policies, but for it to be politically relevant, for it to cause some discomfort, you need good storytellers so that that policy, those policy ideas turn into political issues. Well, that's just my tip to you. Thank you very much. My name is Alan Kasuja. The podcast is Africa Daily. Make sure you listen to it. And I'd like to hand you over to Mavis Owusu-Jamfi from ACET. Thank you. It's been a pleasure.
So, thank you very much, everyone. Thank you, Alan, for moderating our morning for us. It's been thought-provoking. I'm not going to try to summarize, but I think we have a very clear set of actions. My main takeaway today is that we need a confluence of 3 players. So far, we've had the Policy Institute at the table in this discussion. I agree it's time to have the Advocacy Institute as part of this discussion. And when I talk about the Policy Institute, I include the regional organizations, because to be honest, it's all of us doing the same research. So they are regional organizations, etc. The third point now is the political element. And just to wrap up very quickly, we will share an outcome paper on the next steps of this. But the next big thing for us is there is a conversation in the run-up to COP, which you will be hearing about. But then you will also be hearing about a conversation we want to take to the AUC. So the conversation at the AUC, at the head of states level. So we are starting actively actions from today. We've done our declarations. We are now going into our action framework. So thank you for joining us today. And we hope that we stimulated you enough to want to come back when we regroup in COP next, and after that at the Africa Union. Thank you.
Ladies and gentlemen, this concludes